All right, guys. I am here. I know, my bad. I just had to get my mic set up. Um, all right, guys. So yeah, we got bank earnings. Let me know. Can you hear anything? Can you hear the music? What's up, Keith, Raz, Michigan, Alex, Ed, David, Keegan? All right. Tesla falling back a little bit. Nvidia's still up around 130s. You can see gold's still up there too. Gold's still at 24s. I hear you. No music. Okay, gotcha. What's up, pawn? All right. What's up, Sal? All right, here. I'm gonna get some music on. I have Bitcoin in my mind. I don't want to believe that it enters bear market. Bitcoin at 57. Yeah. Yeah. Honestly, my portfolio is still green today, mostly driven by Nike. Um, Nike rebounded a lot, which is good. You know, we didn't take a lot off of Intel. We're still in Home Depot. Target went up too. T-bill paid off some. You see Nvidia double top? Yeah, I do see Nvidia's top up here. 137s, you know, so Nvidia still hasn't broken 135. Here, let me get some music playing. Let me fix this. Yeah, so we do have bank earnings today. That's probably the big thing that we got going on. We do have bank earnings. Wells Fargo at 7 in about 20 minutes. Citigroup at 8. Bank of New York in about 3 minutes. Fasting on Ericsson. Ericsson's already out with theirs, but we do have Wells Fargo earnings dropping. It's a pretty big earnings report. We're not in it or anything, but Oh man. Would it be reasonable to go bearish? I don't know. Today's PPI inflation data, it's an inflation report today. I don't know if it's reasonable to go bearish or not today. Oh man. All right. Yeah, so today is inflation data. All right, guys. So sorry, I'm using AI. I'm seeing how well AI looks up properties. Yeah, let me see. This is a part. Yeah, I'm using AI to look up some properties. It's not that bad, honestly. Mostly it just sent me, yeah, these are off market, though. AI is the poop of the internet for now, at least no chance I'm trusting anything it dishes up. Well, that means you haven't messed with it very much. All right, yeah, let me check out some news. Yeah, I'm opening up the Discord now. What's up, Mr. Scruff? Yeah, the real question, I think, let me do a poll here, guys. Sorry, I'm working on some other stuff. Yeah, I'm opening up the Discord now. The real question is, when does the Fed cut rates? Or we'll do a PPI question. Does PPI come in higher or lower than the 0.1% expected today? All right, so vote on that poll. We're going to keep it easy today. All right, so yeah, the NVIDIA director, Mark A. Stevens, is selling almost 800,000 shares at an average price of $132.50. So again, NVIDIA director Mark A. Stevens is selling some shares. We'll see if that's a bearish or bullish look. Again, Wells Fargo is supposed to drop today. We also supposed to have some other earnings, specifically Bank of New York, which is BK, not Burger King, but Bank of New York. And they are gapping up. Look at Bank of New York and their numbers there. Flying up this morning. Here is their earnings. They posted adjusted EPS of 151. They expected 143. Revenue of 4.6. They expected 4.5 billion. I'll put this up in chat. AI isn't able to discern between valid info and nonsense yet, and the only way it can make that decision is by programmers deciding which sites and sources are valid, which is another whole problem. Yeah, but I think, okay, I think you have to understand that it's not just about querying things, right? Like, querying things is great, but it's not just about that. Like, AI can produce software. It can produce digital works. Like, it can produce marketing material. It can write very well. It can summarize better than any of it. And so I think you're looking at it from one lens, and I get it. Like, I really do get it. But I think it's powerful in a lot of different ways. Like, you're referencing querying things, whether it's spitting out nonsense or not. And again, I'm using AI right now to query things, and it works very well. Like, essentially, I'm looking for a rental property currently, right? And so I said, hey, what are some rental properties I can use in the Woodlands in this price range that I could use for an Airbnb? And it lists a number of different properties that I could use for an Airbnb. And I said, what I said was make it something unique and specific that people would want. And so it sent me properties that had ponds on it, like fishing ponds. It sent me properties that had a little bit of land. It sent me property that had horse stables on it, right? Like, all these things people would want for an Airbnb. So it discerned what I meant by, hey, Airbnb-able, basically. And it sent me a bunch of properties. Very powerful technology, And so now I'm being specific and saying I want to look at properties that only have ponds in the background, and it sent me a list of those properties. If I said, hey, AI, write me a program, it will. It's not going to be perfect, but if you've never tried ChatGPT 4.0, like there's all these different models, 4.0 is the best one. Try those. Yeah, and I understand not trusting the info. Yeah. Yeah, for sure, Zachary. Like, it's powerful. It's super versatile too, is what it is. Like, that's the thing that you got to understand. Like, this is crazy versatile. Like, this is gonna be, it's gonna change the world, and it already is. And that's why Nvidia and other AI stocks are taking off. Anyways, Nvidia. Speaking of Nvidia currently, Bitcoin down to 57K. Here's Nvidia. Nvidia, again, one of their directors is selling some shares, about 800,000 shares. Bank of New York, BK, up to 62.75 on good earnings. You can see the earnings on the bottom of the screen. I'm looking at this property with the pond on it, dude. I might want to buy this thing, man. Although, where is the property? I don't see the pond. What's up, Jeremy? Yeah, straight A's. My son asked ChatGPT to do his homework. Yeah, yeah, so I use when I got my real estate license, right? I had to do continuing education. When I took that exam, I might have used AI. I would never admit to using AI on the side to answer those questions. I would never do that. But uh, yeah, I'm looking. Where's the pond? There's the pond. Can you fish on this pond though? Hmm. Oh man. Oh, I didn't use it to pass my realtor's exam. My realtor's exam, for you must not understand how you take your realtor exam. So your realtor exam is taken in a testing center, and that was taken in 2015. So nope, didn't use it to pass my realtor's exam. I might have used it to summarize my my continued education content, but you'll be all right. There's a difference between passing. Most people don't pass their real estate exam the first try. I did, but again, you take it at a testing center. And when I took it, I didn't even have a smartphone. So, yeah. Passed it first time. Just top 3 test takers of all time ever in the world. I'm currently using ChatGPT to write emails as an attorney. I bought some expensive product like Tesla Powerwall that aren't working. I will use ChatGPT to go to small claims court. Hey, good luck, Robert. All right, guys. Since CPI came in lower, does that mean it's a given that PPI will be lower? No, not necessarily. There's not always a correlation there, so it's not always to see. So a lot of the time CPI will come in one way and PPI will actually come in the other way. I would assume that today's PPI data either comes in as expected or higher than expected, just because a lot of the time they are balanced. So CPI can come in on one side of the spectrum in terms of higher or lower, and PPI will come in on the other side of it, right? So I think that's what I'm betting on today. But again, I might be right. We're just straight up betting. Who knows? Buy dips in small caps. I'm not really a big small cap investor. Do you know why Nvidia went down yesterday? And Nvidia was breaking highs yesterday. You know, I don't think Nvidia is going to go straight up, and I think it's probably due to just basic profit taking. Yeah, I'm trying to find. So this one's supposed to have a pond. So let me see. See, this one does have a pond, but there's no pond here. Wait, let me see. Where's the pond, though? It says pond and backyard. It's beautiful property. I wonder if I could throw in a lower offer here with cash and see if they would accept. Sub-reclaim. Small caps rely on lower rates to survive. Yeah, but who knows when rates are going to actually start going down is the question, right? Like, who knows when rates are going to start dropping? They're not going to cut rates until September, and then at that time, it's going to take at least 6 months to see any noticeable effect on any rates. So that's the only problem. CME watch tool July 30 rate cut went from 2% to 5% yesterday. Yeah, but it's still 95% unlikely, right, Don? So it's still unlikely. The Russell was up almost 4%. Yeah, but yesterday CPI clinched rate cuts and signaled inflation is under control. Small caps flew. Yeah, I mean, we did have better inflation data yesterday. So there goes BK. We do have in 4 minutes chat. So in 4 minutes, we do have... in 4 minutes, we do have... We do have 4 minutes until some earnings come out. Specifically, Wells Fargo earnings drop in 4 minutes. So we'll see what that looks like. But Wells Fargo earnings, there's Nvidia testing that previous closing price. Tesla's still down. Again, we're gonna put the SPY up here. SPY still up at 550s. Down 10%, master of buying high. Yeah, that's how it goes sometimes, bro. All right, Wells Fargo earnings already out. Are they? You're right. Wells Fargo earnings did drop, so Wells Fargo earnings are out. Let me put these up on screen. They are down. Wells Fargo posted 133 versus 129. Thank you. So I was late on them. 133 versus 129. Revenue of 20.69 billion. They expected 20.29. They reaffirmed fiscal year view, but they're still gapping down a little bit. They're not gapping down. They're still dropping some from this. How do you feel about Tesla? Bearish or bullish for the next week? I really have no idea, David, about what Tesla's going to do over the next week. I think the bigger question is what do they do over the next month? With the robotaxi event happening in August, early August. I think that's the big question to ask is what happens to Tesla for their robotaxi event next month. Like, is their robotaxi event gonna, have good or bad things regarding it? We'll see. What do you guys think? Does Tesla bounce or go up from their robotaxi event, or do they pull back a little bit? I'm thinking they're pulling back some. A lot of the time, Tesla is a buy the rumors, sell the news event. Is it pushed back? Okay, so yeah, you're right. So they did push it back until October. So again, the question is it a buy the rumor, sell the news event? So they're gonna push it back another month. So we still got 3 months until the robotaxi event for Tesla. Yeah, and I don't know. I don't know if it's a buy the rumor, sell the news. That's why I got slaughtered yesterday. That makes sense. Yeah, so let me look that up. Alright, so yeah, Tesla delayed robotaxi event until October. They're delaying the launch by about 2 months to October as the design team was told to rework some elements of the car. Bloomberg News reported on Thursday, citing people familiar with the decision. So that is what just happened here. Tesla just delayed their robotaxi event.
Tesla cars may have been used as cabs in New York, but the firm is hitting
the... So you can hear this. Yeah, so they're also competing with Bloomberg, or they're also competing with. Most of this news came out yesterday, but yeah, I'll show you this. Yeah, they're delaying the robotaxi launch to October, according to a report. Yeah, it's confirmed it's pushed back to October. Oh no, it's confirmed. It was confirmed early this morning, specifically in a report by Bloomberg News. It says, quote, Tesla's delaying the launch of robotaxi by about 2 months to October as the design team was told to rework some elements of the car. Bloomberg News reported on Thursday, citing people familiar with the decision, according to Julian Satterthwaite. There's also news that Tesla, quote, won't be granted robotaxi licenses to offer rides if it isn't able to match Google's self-driving company, according to Gary Black. He said, quote, Waymo is the standard. Black emphasized that Waymo has obtained approval to offer robotaxi rides for a fee in multiple cities. He argues that for Tesla to obtain similar approval, it must demonstrate efficacy, specifically achieving one intervention per 17,000 miles, as good as Waymo, and will be willing to assume liability for any damages or injury. Quote, if not, Tesla won't be granted robotaxi licenses to offer rides, according to Black. He referenced a post by James Catt, known for Tesla commentary, who expressed skepticism about Tesla's FSD tech. Catt highlighted that Waymo had an intervention rate of 1 per 17,000 in 2023, while Tesla's FSD currently requires a safety-critical intervention every 250 to 500 miles. He also noted that Tesla's FSD is an excellent driver assistance software. Its rate of improvement is crucial. He mentioned being impressed by the progress from 11 to 12.3 versions in March, but also speculated that data, not unveilings, is what truly matters. End quote. So again, that is the news for Tesla. We'll see if what happens. Again, basically Google's FSD is on point, is what they're saying. We'll see if Tesla can keep up with that, is basically what they're saying. Yeah, Waymo is the standard. Yeah. All right, guys. I went back to jiu-jitsu yesterday. It was freaking horrible. Hey, what's up, David? Congrats, man. Congrats. Y'all go sub to David's channel if you haven't already. Congrats, man. So what happened yesterday? Did we expect small caps to run now? Why is big tech selling off? I'll never take a ride in a self-driving car. Screw that. Yeah, you will, bro. You know, again, like, people, it's hard to really like express what I'm trying to say, but I think it's naive. You know, like, people fear technology so much, right? Like, you have to imagine the same thing. Like, this isn't the first time people fear technology. Like, this has been going on in one way or another for hundreds of years, if not thousands of years. I'm sure the ancients, feared technology to a certain extent as well. When the automobile came out, what do you think people said? People said, "Oh, we're on a spaceship. You know, look at this automobile. You know, carriage is the natural way. You know, riding on horseback is the natural way." And now, fast forward 100 years, and everybody's in a car, and it's not even like we do it without even thinking about it now. And you have to understand that part of it, which is that technology growth and evolution is always going to be there. The problem is that everybody always fears it, and then they accept it, and then they adopt it, and then they move on, and then the next one comes out, and they fear it, and then they accept it, and then they adopt it, and then they move on, and this cycle happens over and over and over again. And so the people saying that they're never going to be in a FSD, again, I think it's incredibly naive. It's just naive. I think everybody's going to be riding an FSD within 20 or 30 years. I think it'll be within 10. Everybody's going to be riding in self-driving vehicles, and I think it's going to save a lot of people. You know, I think the software is going to get better and better. It's going to allow for less drunk driving accidents, less accidents in general. I'll tell you this, right? Like, we have a relatively new vehicle. The current car that we have, it's an SUV. If we veer off the road, right? So say we veer off the road and we start to press into another lane, or we start to press onto the side of the road, my car will literally correct me. Without me having to even touch the wheel, if I start to swerve over, my car will push me back on the road to where I drive straight. And so when you look at that and you think about how much better that's going to get over the next 10 years and how much technology has grown over the last 10 years and how much it will potentially grow over the next 10 years, pretty soon we're going to be riding in FSD cars. Pretty soon we're going to be getting driven by cars themselves, and that's okay. It's not something to fear, you know. Technology gets better, and that's a great thing. It'll save lives. Realistically, it'll save lives. Anyways, Nvidia now dipping under the previous closing price, actually going red. I think it's incredibly arrogant to assume everyone will accept it. Well, everyone is a broad word. A large majority of people will. It's kind of like the same thing where in the early 1900s, everybody didn't accept automobiles, but within a couple decades, most people did, you know. And I think that's the lens you have to look at this under as well. Everybody's not going to accept it, but most people will, you know. And so, and the more people that accept it, the more willing others are going to be to accept it, right? And that's going to snowball, and I think that's very obvious. I'd rather a robot drive my car than my own little brothers. Anybody enjoy Tesla short yesterday? Yeah, Tesla correcting a little bit. Probably because they're delaying their Cybertruck event is what this is, most likely. So Tesla delaying their Cybertruck event. We did have some earnings come out. Citigroup drops at 8 a.m. I really enjoy my FSD Model Y. It takes a lot of the stress out of driving. Yeah, for sure. And again, like I said, when I look at my car right now, where we got a relatively new car that has driver assist, if I try to veer off the road, my car is going to correct me. And it does it very well, right? It does it very well. Where if I try to veer off the road, my car is going to push me back on the road right now. That technology is going to get better and better and better. And I think that's very clear, you know. I think in the end, a lot of the time, the older population fears technology. I think this is something that's very consistent throughout history. People fear technology. Eventually, they come to accept it, and then eventually they adopt it. And I think that is very clear trend over, you know, the last couple centuries, really. And I think that's very obvious. Is everybody going to accept it? No, of course not. But most people will, I think. And I think the technology is just going to get better and better. children born in a world where half the cars drive themselves and the other half of cars take work to make useful. The kids will be lazy. Yeah, but I mean, that's kind of like, listen, that's generally the effect over time. How do we know this? Is like, okay, in the 1970s, most people played outside. 60s, everybody played outside when they were kids. They didn't have TV. All they had was radio. They spent their entire times outside running around doing stuff, and it was great. It was great for them, right? Fast forward to the 90s, most people have TVs, video games. A lot of kids want to play inside now. Fast forward another 20 years to the 2010s. Everybody has smartphones, iPads. More people want to stay inside. That's kind of the natural effect of technology, and I do believe it's a negative thing for sure, but I also think that it's inevitable over time with tech growth. Right, exactly, Don. Just like modern day miners are lazy by using an excavator instead of a pick or shovel, 100%, right? That's just the natural state of things. In the end, everything can basically be put in a phrase of people fear technology. It's inevitable. But if you fear technology so much that you don't invest in the new ones, then you're missing out on some of the biggest gains you can make, right? And I think that's a silly stance to take technology-wise, because you're going to miss out on some of the biggest gains you can make in the market. And a lot of people have. They missed out on this big NVIDIA run, being stubborn, fearing it, instead of just understanding the tech and trying to profit from it. All right, anyway, SPY is down some, but SPY has been breaking lifetime highs over and over and over again. It's finally pulling back a little bit yesterday. I still don't think it's time to buy. I think we could use a little bit larger of a pullback now. What do you expect gold to do? I would expect gold to have a positive correlation, but who knows? Not a positive correlation, a negative correlation, just like CPI did. Gold generally goes up with lower inflation data, but PPI is a little bit different. So PPI is a little bit different here. Yeah, I don't know, Kyle. No idea what you should do there. FSD should ease traffic because most delays are caused by tailgating and therefore excessive braking. No need to increase speed limits to realize that. Yeah, I don't know. I think a lot of problems driving, and I've said this before. You got some older people who sit in the left lane, and they either go under the speed limit or at the speed limit, where people behind them are trying to go faster, which is fine. And they clog traffic that way. They cause people to have to go around them, and they get really stubborn and try to kind of control the road in some toxic sense of like control. Like, I'm going to control everybody else, And I think that's the main problem. They've done studies that have shown that most accidents are actually caused by people driving too slow versus too fast. Like, if you drive with the normal flow of traffic, it's much less likely that accidents are going to happen. If you drive slower than the people in the left lane are trying to go, they have to swerve around you and go in and out, and that causes more traffic. So they've done studies that's shown that. I'm one of those people that gets frustrated because if I want to go 5 or 10 miles an hour over the speed limit, like if somebody's driving faster than me in the left lane, I'm going to get over and let them pass me, right? I'm not going to be like toxic and controlling and be like, they should go the speed limit. I'm going to be the controller of the road. It's like, get out of here, man. Like, but that causes more accidents than not. I'm a grandpa driver as well, believe it or not, Pawn. Like, people might hear me say this and think that I drive fast. Carol, my wife, drives way faster than I could ever drive. Carol's kind of toxic when she drives. She's crazy. She drives crazy fast, especially if we're on like a road trip. I actually drive pretty slow. But with that said, if I'm in the left lane and somebody's going faster than me behind me, I get over and let them pass. If somebody's driving faster than you in the left lane behind you, you're wrong, and you should let them over. Any advice here on how to actually stop loss on a situation like yesterday? I have no idea what you should do. You just trade small. And, yeah, as for your stop loss, I have no idea. PPI will affect Bitcoin to a certain extent, sure. How much, we don't know. But to a certain extent, sure. I got crushed on NVIDIA and Tesla in my house of blue. Sold everything, but still up slightly, waiting for a buy signal. Yeah, I I mean, it's not crazy to assume a pullback was coming. Again, everything is just up so much. Remember, I stopped buying up as much stuff yesterday. Like, I'm green today, or I was green, mostly from Nike bouncing back. We are in snow, SNOW. And again, this is one of those positions where I kind of keep buying in. We're at 130s now. No, I'm not a big road rager. Usually if I get mad at somebody driving, I just kind of smile and wave at them. That makes them more upset than any vulgar signal I could give them, you know. I usually just smile and wave. That hurts them more than anything else. But again, the only way, like, I get frustrated because you got people that go 5 miles an hour under the speed limit in the left lane. And then when you tailgate them, they get mad at you for it, you know, like you should go 5 miles per hour dangerously under the speed limit, you know, because they're anxious, right? But again, if you're anxious driving like I am, I get anxious driving. You got to get in the right lane, right? You shouldn't be blocking the left lane, which is the passing lane in the U.S., you know. So it depends on if you're following that rule. You could drive as slow as you want in the right lane, and that's okay. But if you're in the left lane, you just got to get over and let people move. Because that's really what most traffic is stemming from, is people who don't really know how to drive in the left lane. It's because stocks like the Mag 7 carry the market and are safe while the market is down. High rates, when rates get cut, small caps will rage. Yeah, I mean, I guess that's true. I don't get how people road rage. It's like a waste of time. It doesn't resolve anything but escalates. Yeah, I've never been... Yeah, it depends on... I've gotten mad at other drivers. I've never gotten mad enough at other drivers to where I have, like, caused any type of, like, problem on the road, right? Like, if I'm mad, I'm just going to kind of quietly be mad. It's not like I'm going to tailgate you. I'm not going to freaking do any obscene gestures. I'm not going to yell. I'm definitely not going to follow you or do anything crazy like that. Like, that stems from just a lack of control over themselves. Like, anybody that does that... Again, we're in Texas. I'm in Texas, right? Like, that's a very dumb thing to do here. It's just stupid. It's something people with low IQ do. Most people are smart enough to realize you can't play that here. And I'm just not about to do it. Again, if I'm mad at somebody, I usually just smile and wave. Because that's the most upsetting thing ever. You think dollar index will drop more? It depends, right? It depends on what PPI shows up as. The Dixie usually is going to move inversely to the stock market, so equities. And so it depends on what inflation data shows up as. I have friends that road rage is like, calm down. I think people just get too comfortable in their everyday life to where they start to be in, depends if you drive the speed limit. Not really. So again, a lot of the time in the U.S., most people are going to go 5 to 10 miles per hour over the speed limit. That's the natural flow of traffic, and it's fine if you want to go the actual speed limit. But you should be in the right lane if so, right? If you're in the left lane, which is the passing lane, you shouldn't be driving slow, because that's causing more accidents and it's not helping anything. Rate cuts will benefit all stock anyway. I don't know. I think historically when the Fed cuts rates, the market goes down. Again, generally they're cutting rates because something's broken. And so it's not always the perfect correlation, I guess. But, yeah. When the sell-off came yesterday, investors charged into small caps and other stocks believed to be beneficiaries of the Fed rate cut after CPI. Why would investors go to small caps? Because the rest of the market could be extended maybe, and small caps typically run on rate cuts, I think is the speculation. Right, that's kind of what I do. I'm usually 10 miles per hour, 5 miles per hour over the speed limit, depending on where I am, But again, I might drive in the left passing lane, but like my logic is like I'm in the left passing lane. And if somebody pulls up behind me going faster than me in the left lane, I'll get over in the right lane, let them pass, and then get back over in the left lane, You know, there's no reason everybody shouldn't do that. If somebody's dropping faster than you in the left lane, get over, let them pass. You know, like why keep them behind you? I never understood that. You won't get a ticket then? I mean, I don't know what you're gonna do. Some people, you might get a ticket somewhere. Hey, thanks, Adventures. I really enjoy your stream because you're the only ones that do it super early. I can listen while working remotely. We appreciate you. Hey, thanks, Adventures. I appreciate it, man. Thanks. Appreciate the love, bro. I'm not saying it's okay to long anything, Andre. I really genuinely don't know what you should do. I don't understand people say a Bitcoin to 1 million. Well, you got to understand the nature of Bitcoin, TT. So the nature of Bitcoin is this. Bitcoin is a mineable cryptocurrency. All right. So what I mean by that is like, this is a really dumbed down way of saying it, right? A really simplified way of saying it. But to mine, the way they programmed Bitcoin is very smart, right? The way they did it is that anybody can mine, quote unquote, mine Bitcoin. When you quote unquote mine Bitcoin, your computer, and again, this is a really simplified way of doing it. Your computer is basically solving complex algorithms and formulas, trying to find random Bitcoins, right? Trying to find specific Bitcoins by guessing the number, basically is what it is, right? And again, this is a really simplified way of saying it. And so that's what mining Bitcoin is using your computer to essentially like solve formulas and equations and guess what the guess what the hash number for Bitcoin is. Eventually you might mine one, right? But the more computer power you have, the more you can mine, right? And the longer you let your computer do it, the more it mines, right? That's what Bitcoin mining essentially is. The programmers of Bitcoin were very, very smart in that they made a finite amount of Bitcoin possible to be mined, right? So there's only a finite amount of Bitcoin out there that can be mined. And so in terms of that logic with supply and demand, over time, there's going to be less and less Bitcoin available to mine, right? And so in theory, that should increase the price because of scarcity of Bitcoin over time, right? And so that theory is the one that states like over time, eventually Bitcoin will hit $1 million. And if we look at their last track record of the last like 20 plus years, if we look at the track record of almost the last 20 years, it was about 15 years. Bitcoin has wildly appreciated. It's been the best performing financial asset in the world. And so if that trend continues, it's certainly possible it could hit $1 million eventually. Now, when that will be is a completely, nobody knows when that's going to be. But it's certainly possible eventually it does hit $1 million. Yeah, well, like I said, Don, I was given a much more dumbed down way of saying it, but yes. All right, guys. So we do have Nvidia pulling back, pretty big pullback yesterday. It almost hit 140s yesterday. It's now all the way down to 127s. Yeah, up over 5 billion% in 15 years. Yeah, so again, I'm using AI to explain Bitcoin mining in a simplified way. The first step is verification, which is your computer collects transactions made on the Bitcoin network. The second is puzzle solving, as I suggested, which is it works to solve a complex mathematical problem associated with these transactions. Block creation, the first computer to solve the problem gets to add a new block of transactions to the blockchain. And number 4 is the reward. In return, the computer miner is rewarded with new Bitcoins. Essentially, your computer is ensuring the network security and validating transactions by solving difficult math problems, right? And so in this logic, the more powerful computer you have, the better you're going to be at mining. Yeah, JP Morgan did report earnings here. They posted adjusted EPS of 440, beat the 419 estimates. Net revenue of 51 billion, basically. Wells Fargo was down a little bit on their numbers. Here's JP Morgan. They're actually down a little bit as well to 205s. Pretty much flat though. Yeah, JP Morgan second quarter net revenue is 50.2 bill. They are down though. All of this is mostly gapping down. Wells Fargo down as well. PPI is at 8:30 Eastern time. So yesterday was CPI. Today's PPI. Oh yeah, let me get a timer up. All right, so we got about an hour and 5 minutes. There we go. We got about an hour and 4 minutes. Yeah, why is Bitcoin more worthless than a dollar bill? You know. Again, market price is only what somebody's willing to pay for it. Like, you know, it's interesting here too because you have people that are capitalistic, and you you have people who are on the right side of the political spectrum, right? Like the Republican side. Which is kind of like big business, capitalism. A lot of them are skeptical of banking and like all this different stuff, right? Well, what Bitcoin does is Bitcoin allows you to send money anywhere without red tape. And again, nobody can really stop it. It's also acts as its own intermediary, so you don't really need a bank with Bitcoin. And so I think Bitcoin's use case is very obvious. And especially in an age where we have digital money and money's digital, I think it's obviously a very useful thing. Bitcoin is kind of like online gold too. You know? Yeah, so again, so PPI inflation data is business inflation. It's a wholesale inflation. And so it's how much inflation has risen for businesses, basically. Because with Bitcoin, you can't go to the store and buy a ham sandwich. Yeah, you can. So is a good PPI good for stocks? Well, define good, Robert. I'll take the Bitcoin, Don. Market top was in yesterday. Be warned, a big drop today. Maybe. We already had a big drop yesterday. Not a big drop. I mean, here's NVIDIA. If you look at the SPY, we had a decent little pullback yesterday. We're still up huge on the year. Where? Come on, you know what I mean? Yeah, I mean, I do, but I think, like, okay. I think a lot of people look at Bitcoin like it's just made up money, right? But that comes from a fundamental, like, lack of understanding about what it actually is. Like, Bitcoin is one of the inflation hedges that we use, and that has been a very powerful thing over time. And so I think a lot of people missed out on the crazy bull runs for Bitcoin. And so just like a lot of people are skeptical and pushing for a market crash, a lot of people are skeptical of Bitcoin for that same reason. And again, it's subjective for sure. Who knows what Bitcoin will do? Maybe Bitcoin holds its gains, maybe it doesn't. I'm a big believer in the technology because I think blockchain technology is the next step in our financial evolution. And I think that you're going to want I would rather support Bitcoin, which is an independent form of this type of blockchain technology, versus like a central bank version of it, or like a version of it in which the big banks get involved, right? Like the big banks certainly fear Bitcoin to a certain extent, right? Now, some of them have like started supporting it recently, but yeah, I would rather support an independent form of it versus a big bank form of it. Well, you can buy anything online with it right now, CWC, which is growing. Like, imagine 10 years ago, right, to today. Imagine 10 years ago to today. The amount of stuff that we're buying online today versus 10 years ago is a crazy big increase percentage-wise, right? Like, we're buying much more stuff today online than we were 10 years ago. And I think that type of difference is going to be more and more profound over the next 10 years. And that will make an increased need for Bitcoin and online currencies. For the same reason PayPal is useful, Bitcoin is useful. And so you got some people who think PayPal is the greatest, but they hate Bitcoin. And that's silly because Bitcoin basically is a more efficient form of PayPal. Like, you try to send money out overseas somewhere, it's going to be problems. You know, you try to wire money to certain places overseas, there are going to be problems. You can send Bitcoin virtually anywhere. Yeah, for sure. Do you expect gold to rise to 24.35? I don't know. Gold is up, but the problem with gold right now is, like, I like gold long term. So here's gold. I like gold long term. But the problem with gold right now for me is that gold typically goes in these big upward moves and these big downward moves, right? Like, gold from 2000 to 2012 had a huge 12-year bull run, right? So look at this bull run from like 2000 all the way to 2012, right? Gold had this crazy big bull run, and then it pulled back for like 6 or 7 years, right? And then it had another crazy bull run from, basically 2016. For the last 8 years, gold has been propelling higher, right? And so the only thing I fear regarding gold is that we're going to get another bear market for it, and I'm going to be stuck for a decade in it. And so gold is a good long-term investment, but there's also obvious risks in terms of like the bear markets that gold faces. So gold is great. I prefer real estate, to be honest. Like, real estate, I think, is a much better inflation hedge. It's a much safer inflation hedge. If you buy a rental property in the right places, not only will it mostly keep up with inflation growing at about 5% appreciation a year, but you also earn cash flow on top of it and rental income, right? And so I think all of those things combined make real estate the more steady investment. But again, it depends, right? Nothing's perfect, and so... Do you mean 69,000 or just 69 Bitcoin ATMs reclaimed? Can you invest $15 a month into real estate? Yeah, sure you can. Look up Real Estate Investment Trust, REIT. There's some that you could buy for a couple bucks. Yeah, you might be right, Phil. We'll see. All right, guys. 69,000 got you. Yeah, I don't know what gold's doing today either. Again, I like gold. I'm in gold, but I'm not sure what it's going to do. All right. Earnings season's coming up too, guys. earnings season's here. Most of the big boy earnings start not next week, but the week after that. Next week, next Monday, we got Goldman Sachs, Wells Fargo, or BlackRock. We got some other bank earnings next week. Bank of America, United Health, Progressive, Morgan Stanley, Charles Schwab, PNC, all drop Tuesday morning. Johnson & Johnson drop Wednesday morning. ASML, Elevance, Ally, Synchrony, US Bank. Wednesday, you got United Airlines, Alcoa, Discover. A lot of stuff dropping then too. Taiwan Semiconductors. TSM earnings are going to be dropping Thursday morning. Nokia Thursday, Domino's Pizza Thursday. Thursday evening, we're going to have Netflix earnings. Friday, Amex. Some other ones next Friday. And then the following week is the big one, where we got Tesla, Tuesday, the 23rd. Boo, man. They got Google earnings the same day as Tesla earnings, man. That sucks. I mean, we're going to cover Tesla earnings, but crappy they're doing it the same day. It is earnings season, though. I'm ready for it. Try to see what Amazon earnings are. All right, guys, we got PPI inflation data. Look at NVIDIA rise back up to 128. Again, we'll put the Q up. Q's very flat day today. Very flat day. I might short some stuff here. I might short the Q. Take 100 shares short of the Q right here. Just play with it. Look at it attack this choppy range. We're up $8. We'll see if we get a little bit more from this. See if we get filled here. Okay, well, we got filled a little bit, but a little aggravated that they didn't give me a better fill there, but that's okay. I do like the fact that we're right under the previous closing price. We'll see what happens. Again, I like to attack choppiness. Trying to get an apex here. Is anybody else not able to log into Apex right now? Here, let me pull up Quant Tower. Is Rhythmic down? Apex okay for me. Trade evade's fine. Yeah, I'm trying the Chicago area for Apex. Chewy is up a lot too today. We're gapping up some more. We added some to snow. I don't know if I want to add more to this. I would love to be able to trade some. Yeah, some people say they got to update Quant Tower. Maybe that's what it is. All right, let's try it. Yeah, we're downloading their new one. Yeah, I don't know whether I want to add more to this. I like shorting up here, though. We're at the top of the range. We got a triple top up there at the top. All right, guys. PPI inflation data drops this morning. Also, guys, just a quick reminder. Anybody trying to sell binary options nonsense to you is binary options are total crap. Like, do not buy binary options. Yeah, binary options are horrible. All right, I think I updated Quant Tower. We're gonna log out of this one and log back in the new one. You can see we're up. I should have held longer position here, but that's all good. We're actually green on the day again, mostly driven by this trade. All right, we took a little piece off there just to protect this. We got 50 shares left. We'll let the rest ride. A little baby trade. Do you believe in tech analysis? Sure. Yeah, I do. But I don't think it's a perfect science. Like, one of the things I'm seeing recently is, like, people saying, oh, it's a scam market. You know, CPI came in low and the market went down, right? Acting like there always has to be a positive correlation. And that's, again, just a very dumb mindset. Like, of course, there doesn't always need to be a positive correlation. Again, if there was, everybody would be rich. You got a bunch of rookie traders that take, like, the most obvious correlations and then get mad when they don't work. And the truth is, extension plays a massive factor in everything. Extension is a huge factor you want to pay attention to. What do I mean by extension? What I mean is that if something's up huge amounts, like the S&P, the NASDAQ, the Dow, Nvidia, Apple, you know, all these different blue chips, mega cap stocks, they're up a ridiculous amount over the past year, right? Because of that, they're not always going to have like a perfect correlation with inflation data, with FOMC meetings, with earnings, with any of this stuff, right? They're simply up too much right now. And so the momentum is on the downside for a lot of these. And so, like, if inflation data comes in worse, we'll probably get drops, right? But if inflation data comes in better, we might get bounces, right? But we might also get drops from that as well, just because of the big extension that we're facing right now. All right, so we took a little bit more off there. And I think that's an important thing for people to understand, because people act like they can sit around and wait for earnings to come in good and just click buy, or wait for earnings to come in bad and just click short. And I wish it was that easy. It's just not, though. Yeah, well, I mean, look, the Q is up here. I'm just gonna get out of this little baby trade. The Q is up this much here. Like, look at the Q on the year, guys. Like, the Q is up massive amounts. You know, so again, even if inflation data comes in good, it's still going to take a lot of work to get the Q to go like that, right? To get the Q to come back up, you know, it's not the easiest thing, even with good inflation data, for the Q to break highs again and continue going up. You know, look at how steep this is, right? Like that's a steep trend. It's not like the momentum is not always on the upside. Like sometimes if we're up too much, I would argue the momentum's on the downside, even if we get better inflation data. The market's also kind of like getting. The market's also kind of getting ready for rate cuts, right? So there might be some movement there because of like the market preparing itself for rate cuts. There's just a lot of differences that would make the market move in a less definitive way, and people have to understand that. Like again, I see a lot of people calling the market a scam market because it's not doing exactly what they want it to do, and again, they're just mostly rookie traders. How far do you realistically expect the market to possibly correct? I have no idea how much the market's going to correct. I would assume it's going to go something like this, maybe down to like the 450s or 460s. I think down to this level makes sense. You know, Nvidia is the other one that you could talk about, where Nvidia is up this much on the year. I would assume Nvidia is going to come back down to maybe like this 105s, 110 level, maybe more. You know, again, we really don't know. I'm just guessing, straight up guessing. All right, guys, we got basically 50 minutes left. PPI inflation data drop soon, guys. We'll see what happens. Hey, what up to Quant Tower? I thought I pulled it up. Yeah, I'm in TBIL here. Fair assumptions, but to that I say people get fearful and never get in, which is also not a good sitting on the sidelines. 100%. No, I mean it's always like the way you get around that though, right? And what Phil is saying here is basically that people are worried so much about a correction that they never end up buying, right? And this is, you know, if you want to know who's the type of people who are always bearish, who are always pushing for bear action, who are always mad the market's pushing up, who are always talking about the next big crash is imminent, right? Like those are mostly people who miss out on the big bull runs, right? The people who miss out on the big bull runs, confirmation bias tells them that because they missed out on it, they have to be right. Like their ego gets in the way. They have to be right. And so they end up just never getting in, never getting involved, and going around preaching market crashes because that's what they want to happen because they missed out on the big bull run. The biggest way to get around that is just a dollar cost average, right? DCA over time. The whole point of DCAing, which is dollar cost averaging, is to make periodic buys at specific intervals, regardless of price, to curb inflation or to curb volatility. I mean, so if you're worried about a pullback here, if you buy a set amount of shares every week, it doesn't matter how much it pulls back. You're still going to be averaging into a position, and it's going to kind of help you get past the volatility over time. You should always enter the market, I would say. Like entering the market long term is, generally a good move, but you can get unlucky if you get the wrong entry. Hey, what's up, him? What's up, man? PPI. PPI is basically the business inflation, how much businesses are paying for things, and how much those prices are going up or down. All right, we got about 600 people here live. We still got 40 minutes until data comes out. Oh, yeah. Sorry, Sam. Should have let it just ride. The reaction at the time of the news release is very important. If it doesn't move much, the traders panic and sell, so it results in a pullback. I don't know. I would say the reaction over time to the news is more insignificant than people realize, right? Like, we cover it a lot here, but the reaction to PPI news at 8:30, a lot of the time they say the first move is the wrong move. So the market might go like this from PPI, and then afterwards it kind of goes like this, and then it ends up going like this. And so in the end, this becomes just less significant because, it's just kind of a knee-jerk reaction to the news. Now, it's still important to watch, like, how the market interprets it, but the real move plays out over the following 24 hours, I would say. Mic is slow. Yeah, I mean, my mic needs to do some exercise, speed up a little bit, PPI will do the opposite of CPI. Yeah, well, I mean, there's a lot of ways you could look at it under, but this is basically business inflation. What do you guys think? Does the market react positively or negatively to PPI data? Again, I'm looking at the poll numbers. On the poll, we got 50. We're basically 50-50 split down the middle. Interesting. 51-49. Kind of shows you the bear versus bull fight. Hit the like button, guys, if you haven't already. Hit the notification bell. I appreciate you guys. Thanks so much. SPY is very flat. I don't know what I want to do. We're kind of in the middle range. If we push up a little bit, I'll short or do whatever. The Q is a little bit more polarized up there. Let me see if I can actually... Yeah, so I'm having trouble getting in Rhythmic. Rhythmic's not connecting for me. Even the Dow is a great ETF with the old companies. Yeah, the Dow. The Dow is kind of like what the older generations use. Something you realize. Like, a lot of the older generations use the Dow. Okay, so yeah, now, so I just had to use the newest form of Quant Tower, and now it's working fine. So that's all it was. It was just I had to log into my new version of it. I was about to short this queue up here, but I just didn't make it in time, unfortunately. Same move as yesterday, small pump. All right, so there we go. We're in Rhythmic, connected. Ooh, it is a new system for Rhythmic. Interesting. Looks a little different. Still play with this some. We're at the top of the range. I want to see if we come back down. Yeah, I mean, day trading, you just like, okay, one thing you realize very quickly, right? Like, one of the truths that I find day trading is that day trading can be very profitable. But you have to wait for the right days, right? Like, you have to wait for your edge to show up, and your edge is not always going to be there. And I think a lot of people try to day trade every single day at the same time every day, like clockwork, and their edge isn't always there, right? So some days they do really well, and others days they lose a ton, right? Where, like, an example of this is my strategy. I like trading ahead of big economic releases. Typically, that's where I have the biggest edge. Trading choppy action leading into big economic releases. I think that's the area where I have the most success. That's the area where I think the edge is the highest. And so if I can sit around and wait for those days, like big FOMC days, CPI days, PPI days, like stuff like that, then that's when my edge works the best, right? But if I don't sit around and wait for those days and I try to trade this strategy every single day, it's not going to work. I'm going to lose money most of the time, I would say. So it really just depends on what your edge is and, how you can capitalize it, you said, we got almost 600 people here live. Yeah, the Q's moving up. We might kind of trade with the gains that we have today. All right, we're in 100 shares short on the Q. We still got 40 minutes roughly until this plays out, so we got some time to let this work. How you guys doing today? Are you guys having a green or red week? It's Friday, so it's finally the end of the week. Are you guys having a profitable week or a losing week to this week's chat? Let me know what you guys think. Green, minus $150, red AF. Should have let it ride. Yeah, I'm down a little bit today. Or I'm down a little bit on this last trade. Yeah, market's actually pushing up towards the top of the range here. See if we get a dip. I'm ready. See if we get a pullback here. Who knows though? A lot of the time we get choppiness. Great month. Nice. Was up until yesterday. Lost about 15K. Yeah. Yeah, we're just kind of playing with this cushion that we have here in the Q. Could add some more to this. Maybe I'll try. All right, we're at 150 shares now. See if this works. It doesn't have to do anything, but feels extended. 100% agree. Morning shot, did you watch? No, I'm not. I don't really follow any of that, brother. Yeah, I'm not really following any of that stuff, dude. It's just not really my style, man. I don't, like, I'm very neutral politically. I really don't care about much of that. I know some of it's kind of important, but again, for me, it's just boring. Cooled us down overnight. Been steady. Yeah, the problem I have is that eventually gold's not going to hold. It eventually is going to start pulling back down, and nobody knows when. And when gold starts to bear trend, it can bear trend for a long time. So you just got to be really careful. Always that crazy data dump when we will. Yeah, it's the 8 a.m. scrum. There'll definitely be a pullback. Might be today, might not happen this year. Just trade out, yeah. Bro, PPI data comes, Bitcoin view up or fall. I have no idea what Bitcoin's gonna do. No idea. Might go up, down, sideways. Genuinely no idea. We got 30 minutes. Enjoy the show and appreciate the informative comments in the chat. Seems like this fam stays on point. Hey, thanks, Jason. Appreciate it, man. Yeah, we try. Over here, we try. Hey, thanks, Beach. Is gold a buy or sell right now, chat? What do you guys think? Analysts suggest gold 3,000 by the end of the year. I don't know about that. All right, so the Q's pushing up. I'll add a little bit more here just to play with it. We got 200 shares. We're right at the top of the range. Kind of a risky bet, but we could play with it and see what happens. If we break over this top, we're just going to have to cut it. If PPI comes in high, what do you think market would do? I have no idea. I think sometimes PPI can move kind of similar to the rest of the market where high PPI is bad and low PPI is good. I think it can also very easily happen the other way where high PPI is causes a positive reaction and low PPI causes a negative reaction. It's definitely not a given. All right, so we finally got this dip again here on this trade. I'm gonna go to take profit, I guess. We were right about the top. We caught it. I'm gonna take half of that off. We'll let the rest sit. I have 20 ounces of gold, looking to buy more. Okay, I'm here, sorry I'm late. I'm holding, I had to sleep from Alaska. The market takes me away from everything. Yeah, it's kind of the nature of it, brother. I don't want to give this back, so I'm just going to cut it and sit on my little baby game. We're just playing around here is what we're doing. Probably could have sat on this a little bit longer, caught a little bit more, but it's all good. And there's a little rebound back up. Again, a lot of this is based off of a video. We still got 30 minutes, chat. Almost to the bottom of the range. Again, my plan works beautifully here. Are you not covering Citigroup results? Yeah, Citigroup results don't drop until 8 a.m., which just happened now, I guess. So, yeah, we'll cover Citigroup. We'll see what this does to the market. Citigroup posted 152 EPS, better than expected. Revenue of slightly better than expected. So, revenue was kind of flat, but here's Citigroup's results right there. And then we'll put up Citigroup right here. Citigroup is actually up a little bit. Again, it had slightly better than expected EPS and revenue. And market started to flush. It's time to buy the dip. I don't know. Citigroup's still trying to move up. JP Morgan earnings going up now. Are they really? There's Citigroup. Again, we're right at the previous closing price. so we are pulling back a little bit. Citigroup's still trying to break highs. There it goes. Citigroup did just break highs of the day here. So Citigroup is riding up some. Yeah, so look at Citigroup fly. Wow. It most likely roll out. I don't know. Ain't no way. I mean, yeah. All right, guys, we got 24 minutes. 24 minutes. Look at Citigroup up to 67s here. 25 minutes, 30 minutes left until market opens. Or until PPI comes out, chat. We'll see what we get. There we go. What do you think will happen with GBP US dollar? I'm not sure. I'm not a big Forex trader. We're watching gold though, but I'm watching the S&P, the NASDAQ a little bit more. All right, here we go. We got 25 minutes, chat. 25 minutes. Yeah, I'm not sure about the other one either, but both of those are great, Sam. Yeah, Apex and Top are great. But yeah, there's Citigroup. Look at Citigroup run on good earnings. Again, PPI inflation data drops at 8:30. Expectations are 0.1%. We also have core dropping this morning, chat. So core PPI. Core PPI dropping. Expectations for core PPI today are for 0.2% for core. Regular PPI expected at 0.1%. We also have Michigan consumer sentiment data. And so we'll see what that looks like. Next week, we have Powell speaking again on Monday. But remember, guys, so remember how I talked about we have a high edge? I'm also up a couple $100 in futures today. Mostly in my funded account trading. Let me show you guys. So we're mostly trading you can kind of see we're mostly up $126. Again, mostly trading the same strategy where we trade choppiness. Where we trade chop. We were down a lot prior to this, but what got me back on track is what I did here was that I shorted. Again, the logic of it is this, okay? We have 22 minutes until PPI inflation data. And again, you're not going to be able to do this every single day. You're just not going to be able to do it every single day. It's not going to work every single day, right? Like you're going to have to wait for economic reports, earnings. You're going to have to wait for markets, right? Earnings, it works less, okay? I have a different strategy for earnings, but prior to big economic reports like CPI, PPI, FOMC meetings, inflation data, unemployment, GDP data, PCE data, we get choppy action a lot of the time. Here's the NASDAQ here. So what did I do today, chat? What did you see me do? I shorted this top. We moved up to this level. This is where I shorted right here. Why did I short right there? Because it's a triple top. We got a top here, a top here. We got 20 minutes until the FOMC or until PPI inflation data drops. And so what is it highly probable to do? It's highly probable to move in a choppy range. And so when we start to go up here, the likelihood that it was going to go like this was so high. It's so high, right? So we made money both actually literally shorting the Q as well as shorting the NASDAQ. And again, it's just incredibly consistent. It's not going to work every time. I can't guarantee it's ever going to work. But for me, it's one of my highest edge strategies. I think a lot of people get really gambly with breakouts. They want to trade breakouts and all this exciting nonsense. Most of the time, the edge is worse than that. Like, I think it's much more probable that we're just going to get flat, choppy action. And I can short the top, buy the bottom, cover the top. And it's powerful. It's genuinely powerful. This is a strategy that I've been using a lot. And it simply works. You can see it on the SPY as well. Here look, here's the SPY. Same exact thing. Liquidity is low for sure. But again, to put it in a better perspective here, here's the E-mini in futures. Right? In the futures market, this is a big edge. Again, so the likelihood that I can short the top here, cover towards the bottom, short the top, cover towards the bottom, buy the bottom, cover towards the top, and attack this choppy range on the S&P is very high. You know, it's very high. And I don't know why more traders don't do this. Newbie question, I know, but how authentic are earnings reports in your opinion on the 10 scale? Define authentic. Do you mean how definitive are the reactions versus good or bad earnings? I would say not very high at all. They're not very definitive at all. They're super random, I would argue. But again, a lot of it has to do with extension, like super like specific things they find in the earnings report itself. Point is, you're not going to be able to sit around and just click buy on good earnings and sell on bad earnings. It's just not that easy, unfortunately. John, tell me why I've watched you say this for weeks and I just noticed it today. I'm trying it out on Tuesday. It works for me, man. You just got to figure out days in which you have actual choppy action, right? Like okay, the days it works the best for me, CPI, PPI, FOMC meetings are probably the best, right? CPI, PPI, FOMC meetings. Those are the big three, right? And those happen all. CPI, PPI drop once a month, right? PCE, you could probably do it on PCE as well. And then FOMCs happen every 6 weeks. So you just got to wait, right? And again, in my system, I wait and I go big on those days, right? Where this isn't really big today, but yeah. And again, I'm up thousands on the year trading a mix of this versus other systems and strategies. Yeah, I'm in my 30s and I nap most days too. Don't you use tech analysis? Yes, what I just explained is a technical analysis system. Is this strat for attacking choppiness mainly for days with events? Yes, it's only days with events, right? Days outside of events, I'm usually like trading trends, you know. And I'm trading trends regardless on these days as well. It's just on these days, the likelihood that we're going to get a sideways trend is high. So I'm attacking a sideways trend. Attacking indecision, 100%. And it works. I can't claim it's going to work for you. Nobody can. Not an investment professional. I'm not liable if you lose. Of course, like nobody knows whether it's going to work for you or not. Not an investment professional. I'm not liable if you lose. I do trade off stream. You're not going to see all my trades. I'm not even claiming to be a profitable trader or a good trader. Always do your own research. Understand CFTC 4.41. Hypothetical or simulated performance have limitations. All that good stuff, chat. All right, guys, look at Citigroup. Citigroup's still moving up. The S&P still bouncing some here. I think gold hits 3K in 2025. Maybe. Is there any reasonable reason for yesterday's drop in the NASDAQ and NVIDIA? I mean, again, I think you're looking at the market wrong. So, like, the market goes like this, right? Like trying to find a reason that it goes like this. Like, I guess there's a reason. It's doing that from profit taking, selling. But the market can be very random. When you zoom in, the market can just be very, very, very random, undecisive, right? So the market dropped yesterday probably because of extension on the upside. Like, we've gone up so much, it needs to pull back some in terms of just balance. I would just say balance is the reason it pulled back yesterday. All right, so yeah, Citigroup 152 expected 139 revenue of 20.1. They expected 20.07. Investment banking revenue came in at 853 million. They expected 870. FICC sales and trading at 3.56 billion. They expected 3.61. Banking rev came in at 1.63. They expected 1.55. The JP Morgan CFO says a little more cautious about debt capital markets. Wells Fargo CFO says they expect the fiscal year to decline to be upper half of the forecast range. Consumer activity is robust, he says. Market rotated into small caps. Yeah, we do see a lot of that in like the Russell. Russell ripped up to 2170s yesterday. I'm not a big Russell investor, though. The experts were saying, yes, it was extended in the financials and real estate markets were undervalued, so the ones with money made big moves rotating out to those markets. Yeah, maybe. This means that such drops as you draw should happen at least when the data is natural. Yesterday was suggesting a ride up. Well, I mean, it depends on how you look at extension. We're extended on the upside. I think it's time to pull back some. All right, guys, we're going to throw it in sub-only mode. So hit that sub button, guys. Hit the notification bell. We appreciate it. PPI inflation data drops today at 8:30 Eastern Standard Time. Here's the SPY. We'll put the Q up here. Again, Citigroup's been flying up all morning. Here's Tesla. We got 13 minutes left. Tesla, everything kind of dipping down a little bit. It's not a surprise. Everything's been up so much over the past couple months that it's not a shock to see a red day. You know, things have been moving up so much that now that we had a red day yesterday, people were like, hey, what the heck? Why is the market moving down? Because it doesn't move straight up. That's why. It's not going to go straight up. It's not a reasonable expectation for it to go straight up. Yeah, well, the Fed wants the economy to slow. You know, it's kind of like the frustrating thing that I see on a regular basis is that like the Fed is keeping interest rates high for a reason. Why do you think they're keeping rates high? They're doing it to push down the economy, right? And so you got people that just want to make it seem like it's the worst it could ever be right now. And what do? They bring up every aspect of the economy that's weak. Right? Like they say, oh, well, look at this metric and look at this metric. This means the economy is weak. But the overarching point that they're missing is that the Fed's trying to push the economy down, right? Like a super robust economy is not always the best thing for everybody. What the Fed's trying to do is keep interest rates high to push the economy down so that inflation goes down. You know, but again, some people still they're so desperate to make it seem like it's the worst it could ever be that they isolate specific metrics on the economy slowing, which is the point of keeping rates high like we have been. Like the reason the Federal Reserve raised interest rates aggressively, did a bunch of rate hikes, and then paused interest rates where they are for the last like 8 months to a year. The reason they did that is to push the economy down. And so referencing points in the economy in which have been pushed down intentionally to try to say that we're in trouble is a silly thing, and it comes from a lack of understanding about economics, you know. And so that's the biggest thing that I think a lot of people should understand is that the Fed's trying to push the economy down. That's why we're seeing damage to inflation. That's why we're seeing inflation go down, because the Fed's keeping interest rates high, trying to discourage it so that prices go down. In the end, the other argument, again, that we hear a lot is you hear people bring up real estate like, oh, well, people are trying to buy homes. Real estate has appreciated so much in 5 years. It's not time to just let it grow more, right? Like, we don't want real estate to grow more. In fact, we want the opposite to happen. Real estate can handle getting pushed down a little bit through high interest rates. In the end, real estate prices doubled in the 2020s. They doubled, right? They went up 100% plus. That's not always a good thing, and that's not sustainable. We can't just allow them to continue to go higher and higher so people can sell more homes and so real estate people are happy. That's silly. It's unrealistic. It's okay to keep interest rates high, discourage spending a little bit, let housing prices come back down to earth, let car prices come back down to earth. Car prices had a crazy run where they were selling used cars for 40 grand, like crappy used cars for 40 grand. And so those things can come down a little bit. Realistically, like, they need to come down some. And so, yeah, I think, again, I'm under the team of, like, let's keep interest rates high and let everything come back down to earth a little bit, because we need it to happen. Right, exactly, Don. It's time to let them come down. Buy rumor, sell the news. How can you buy home with interest rate of 6? You're not supposed to always be able to buy, like, okay, interest rates are about 7% right now, but it's not always the time for people to buy homes, right? Real estate has to correct and come back down to earth a little bit, right? Like, sustainable, like, it's not always the time. If I'll put it this way, if prices for homes have gone up so much, right? That's why y'all are really unhappy, is that the price of homes are unaffordable. If you want those prices to come back down to earth or settle down a little bit, like, you need to discourage it. How do you discourage it? You discourage it by keeping interest rates high. Same thing with automobiles, right? Same thing with lending in general. Of course, lenders are unhappy because they want thriving business at all times. But again, that's part of the game. If you're in real estate, mortgages, it's not always time to have a thriving business for you. That's not a realistic expectation for your business, right? Like, the reality is you got to let things come back down to earth a little bit, and that's why high interest rates are important. All right, guys, we got 8 minutes. We got about 1,000 people here live. I have to disagree. The dollar is suffering. I don't know, man. The dollar has flown up over the past 5 years, too. It can handle going down a little bit. The problem with the dollar is the same kind of nuance where, again, if we look at the Dixie here, right, let's take a look. Here's the Dixie. I'm having trouble drawing it. There we go. Here's the Dixie, right? If I put up a weekly chart, after 2020, what did people say, right? After 2020, what do people say? They say, oh, the dollar's flying up because of all the inflation. It's the end of the world. The Dixie's flying up. It's the end of the world, right? Then the Dixie starts to correct a little bit. And what do they say? They say, oh, the Dixie's pulling back some. It's the end of the world, right? So no matter what the dollar does, if the dollar goes up too much, they say it's the end of the world because the dollar is up too much and inflation's a problem. If the dollar pulls back a little bit, which if you look at this chart objectively, it's not like the dollar's crashing down. Like, the dollar is still at the top of this range here. Like, look, here's the range. Here's the dollar. So it's not like the dollar's crashing down a little bit in any significant way. Again, that's mostly just people trying to scare others. And so we can agree to disagree, to be honest. Again, for me, I'm under the team of let's let things come back down to earth. If people think they're unhappy now, when we cut rates and inflation spikes, people are really going to be unhappy. Right? And sure, real estate agents are going to be happy. Lenders are going to be happy. Everybody else is going to be PO'd. Everybody else, prices are going to be so freaking high for everybody else, they're not going to be happy. And so we got to let things come down to earth a little bit. People think 0 to 2.5 is normal. Right. It's crazy low. We don't need it that low. That's a ridiculous expectation, All right, guys. We got 1,100 people here live. We still got 5+ minutes left until PPI data drops. My first interest rate in the 90s was 12%. I was making $14 an hour and figured it out. It's about priority. Sure. I mean, to be fair, $14 an hour was a ton of money back then in the 90s. $14 an hour is probably the equivalent of about $40 an hour right now. And so it's a little bit different, to be fair, but still. I understand your point. You have to think the majority of people can't afford to buy assets like us in here. Yeah. All right, PPI inflation data. Yeah, $40 an hour is about $500 a day. That's pretty good, right? It's pretty good. I mean, $500 a day times 5 days a week. It's about 10K a month. So about 100K, about 120K a year. A little bit more than that actually, but still, it's not bad. It's good enough. 100K a month, 100K a year is not what it used to be though. Yeah, where's GameStop? I haven't even looked at it today. GameStop's still at 25, so it looks good. All right, guys, 4 minutes. 4 minutes left. Yeah, I was just guessing, Sass. So I was just guessing. I don't know. Yeah, nobody can qualify for a mortgage on 14 an hour. All right, what's up, Jeffrey? Hey, thanks, man. Does lower PPI mean bullish for the stocks? It's not that definitive. It's not that easy. We don't know what it's going to mean, but it's definitely not that easy. All right, guys, we got 3 minutes. 3 minutes. Let's see what we get today. PPI inflation data drops very soon. 8:30, expected at 0.1%. We also have bank earnings dropping. Let's do this. Dollar index is on the right. We got the Q on the middle, and video on the left side. Should we put gold up maybe here? So here's the Dixie. We'll put gold up here too, since people kind of want gold, I realize. All right, we got 3 minutes left, chat. 3 minutes. There's gold. Gold's trying. Get the Dixie at 104s. Yeah, so there's the Q. Here, we'll put the SPY up. SPY very neutral and flat leading into this report, which is, again, not a shock. The dollar index is moving up, which means the equities market's probably moving down. Gold has been downtrending all morning here, chat. So we do have gold downtrending all morning. JP Morgan had a massive beat on EPS. I don't think it was massive. It did beat EPS, but it wasn't crazy big. JP Morgan posted. Citigroup posted as well. JP Morgan. I'll have to look at what they posted, but I don't think it was a massive beat. I think it was a slight beat. Yeah, they posted 440 versus 420 estimates. So, yeah, 20 cents. You know, I mean, it's not a crazy beat, but it's not a bad beat either. So it's okay. All right, guys, we got a minute and a half left. Hit the live button next to the play button. Make sure you're fully caught up on stream chat. I appreciate it. Hit the live button. Let's do this. Here we go. GameStop actually testing highs right now too. All right, we got 51-50 split down the middle, or 51-49 split down the middle. 51% of people think we're going to come in higher than expected. 49% of people think we're going to come in lower than expected. Give me your last minute predictions. We got 1 minute left, chat. 1 minute left. The PPI news is going to be dropped right here, as we always do, chat, right here, like we always do. Again, expectations are 0.1%. We'll see if we get it. PPI comes out at 8:30. That's about right now. You guys ready? Here we go. PPI expected at 0.1%. We got 20 seconds. 20 seconds. Hit the live button next to the play button. Make sure you're fully caught up on stream. All right, this timer's a little bit early. Live button next to the play button. We also have building permits for Canada, Michigan, consumer sentiment. Here we go. 0.1% is what's expected. 5 seconds, Chad. 5 seconds. Here we go. And there's the report. PPI showed up at 0.2%, higher than expected at 0.2% versus 0.1% expected. 0.2% versus 0.1% expected. Year over year PPI came in at 2.6% versus 2.3% expected. Core PPI came in at 0.2% higher at 0.4% versus 0.2% expected. The market's actually starting to retrace a little bit, so it dropped, and now it's starting to retrace. And again, we got this right. Somebody asked me earlier what I thought PPI would show up as. I told him I thought it would come in higher than expected. Right? Because generally things are pretty balanced. I told people I thought PPI would come in higher than expected. And we were right. I said 0.2. I think we got it exactly right. But again, there's gold. Gold's falling down a little bit on this report. The S&P hasn't really moved at all. The dollar index is spiking up a little bit. But again, PPI showed up higher than expected, worse than expected. I guess you could call it worse. But the market seems to be acting okay here. So again, PPI month over month showed up at 0.2%. 0.2%, guys. Look at gold fall. Again, the SPY is kind of flat. The SPY hasn't moved almost at all here, which is really interesting. The SPY basically hasn't moved. Gold is falling down much more than the S&P. What about the Q? The Q hasn't really moved at all either. Very interesting. Again, the SPY and Q haven't basically moved at all. Dixie spiking up, so the dollar index is spiking up on higher prices. Gold is falling down fast. Interesting, for sure. Interesting. But yeah, the market, guys, again, the market is basically unchanged from PPI data. Still technically green on the SPY. The SPY looks like it's actually starting to bounce a little bit. Yeah, look at the SPY. Interesting. The Dixie is spiked. The SPY is starting to move some. Gold is falling down, though, so gold is weak on higher inflation data. You would assume gold might go up because of people hedging against the inflation rise through gold. But again, gold is going down. What is Bitcoin doing? So gold is falling. There's Bitcoin. Bitcoin fell a little bit, but still hasn't really had any massive reaction. SPY is basically flat right now, which is at 556.80s here. Nvidia is actually green from this report. Weird, man. Nvidia going up. Again, SPY technically green on this report now too. So SPY technically green. The Dixie is spiking up. What do you guys think the market's going to do? Will the market go up or down now, chat? Let me know what you think. Yeah, Nvidia spiking up to 128. SPY hit 557s. Interesting, for sure. We'll see if it holds. I mean, it's not manipulation, Pedro. Like, looking at it and thinking that it has to move in a completely definitive way is kind of a rookie mindset. No offense. What I mean by that is, like, if inflation data comes in low, the market doesn't have to go up, and you're not going to be able to play the market that way. It's just not that easy. Especially PPI. PPI I've covered every single month for years. Right? PPI does not move in any type of definitive correlation with inflation data and market reactions, right? What I mean is, like, PPI, just because PPI comes in high does not mean the market's going to go down. And it's never been like that. Again, I've covered it every month for years. It's never been like that. Again, that's kind of a new trader mindset, right? Like, again, the market is super nuanced and is never going to go exactly like it should in terms of, like, low CPI means the market goes up. High CPI means the market goes down. I wish it was that easy to make money, and if it was, we'd all be rich, right? It's just not. Yeah, we got Michigan consumer sentiment coming out later on this morning, too. Isn't it bad? Producer price is higher, but consumer prices is lower. Well, it's better for inflation in that regard. So if producers are paying higher prices and CPI is still down, then that's good. Yeah, all good, Pedro. It's all good, brother. Yeah, first move can be the wrong move. So we might actually get a correction back down some too here. That's certainly possible as well. You know, we don't know for sure, but it's certainly possible that that's what we get. Also, guys, if you haven't already, check out my my affiliate Apex. Apex is a funded account program. If you want to day trade, you can see we day traded today with them, right? What they do is they give you a demo. You can see this is a 50K funded account. You can see what we did today. One of my favorite strategies to use is I attack choppiness on big economic release days. So again, leading into this report, I identify a sideways neutral range and I short the top, which is what I did to make this money, and I covered at the bottom, right? And so again, this is very consistent that we get choppiness leading into these reports. And so on these funded account programs, that's how I could either get funded or make money on these funded account programs. And so again, this is a 50K funded account. We're up a bunch on. We're also up thousands in another one. And again, what Apex does is they give you a demo and they test your skill with the demo account first. If you could pass the test with the demo, then they fund you the same amount with a regular account. The base one's 25K, so they're going to give you a 25K demo. If you can make 1,500 without losing 1,500 and following their rules, they fund you 25K with a 90% split, and they pay out hundreds of millions of dollars. It also comes with real-time data, and the value's there. If you're going to pay for a demo account with real-time data, this is only about 35 bucks a month. It's going to cost about the same, right? So you're getting some value, but if you pass this when you get 25K in funding with a 90% split, for the time being, if you use my link and coupon code, you can also get the 150, 250, and 300K challenges for the same price, about 35 to 40 bucks. And again, it's a great way to learn how to day trade. If you lose, you're only out 35, 40 bucks, but if you pass it, you get a ton of funding with a 90% split. And again, they've paid out over 230 million since 2022. So it's just one of the most legit companies in the world. Great way to learn how to day trade. And again, they are a sponsor of mine. They pay me money. I'm biased because of it. And so again, I don't claim anything. You want to check out with them first. Confirm everything with them. I can't guarantee anything here. I'm not an investment professional. You also want to understand CFTC 4.41, hypothetical or simulated performance, have limitations. Guys, understand all this stuff. I do trade off stream. I don't even claim to be a good trader. But yeah, check them out. Use coupon code BT if you want the max discount. Hey, congrats, Christopher. Good luck, brother. All right, so again, market's starting to pop back up a little bit. Very choppy and sideways from this PPI report. Very choppy and sideways. Hey, thanks, Curls. I'm not a professional trader, but I did stay at a Holiday Inn. Yeah. The GOAT. Yeah, again, SPY's basically completely flat. Dollar index is kind of flat too. So is Nvidia. So a lot of stuff is basically sideways right now in this higher PPI data. Again, CPI data came in so good that I don't think it matters too much. And I think that's the lens most of the market is looking at it under. But yeah, it'll be interesting to see. Core PPI came in higher than expected as well. CPI is much more important, Chuck. But it's arguable. It's subjective, I guess. Certain people are going to think one's more important than the other. I don't think it really matters too much. The more important one than both of these is PCE. Core PCE data is more important. Core PCE drops once a month. It's what the Fed uses to gauge inflation over everything else, right? So CPI is important for retail. PPI is important for retail. But PCE is probably arguably the more important one. Have you ever seen gold and silver move differently than each other on the events news? I don't really pay attention to the differences of gold and silver price, to be honest. PCE drops once a month. I'm not sure when the next one is. It's probably, I don't think it's next week, is it next week? Let me see. I don't think so. I don't think we have anything next week really outside of retail sales data. Powell speaks Monday. Tuesday we have retail sales data, import-export prices. Wednesday we got nothing really except for some Fed members and housing starts and building permits. Thursday next week we got jobless claims and the ECB decision. Friday next week we got nothing basically, except for some earnings. So the week after next, I think we have GDP and PCE data. Let me see. So I think it's not next week, but the week after, the week of the 22nd. I think that's when we have PCE. PCE is expected. Yeah, so PCE drops Friday, July 26th. It's expected. Core PCE is the most important one, right? So core is what you want to pay attention to. Core PCE is expected at 0.1% on the month and year over year at 2.6%. So, I know maybe this is what they showed up at last time. I don't think we have the expectations. Okay, this is just the previous report. So we don't know what they're expecting next time for PCE data, actually. Yeah, those earnings are already out, Mike. So the JP Morgan, Wells Fargo already dropped earnings today. All right, so again, here comes the SPY moving down. A lot of indecision here. Choppiness in the SPY. Dollar index is doing the same thing, but on the other side. Y'all do me a favor, hit that subscribe button if you haven't already. Hit the notification bell. I appreciate it. Again, we do have earnings season coming up today. We do have earnings season. Fun fact, historically, this is the slowest couple weeks of the entire year. My guess is because everybody's traveling. We still got tons of people. We had over 2,000 people here when PPI dropped, but it really is one of the slower weeks because everybody's traveling and on vacation. So earnings season's coming soon, so that'll heat things up a little bit better. John Blassing guy is back again. The GOAT, man. The guy who said that money printing does not cause inflation. He's back again, guys, to say, hey, listen, this genius of a mind here is saying, bro, it's not choppy. It's trending downward, guys. If the Dunning-Kruger were a person, it would be you, John. It's all love. Cheers to you. SPY bouncing back up a little bit here. Again, SPY back up to over the VWAP, over the 200 EMA. I know, man. What a GOAT. Listen, I love it. Yeah, he's either trolling or really new. I think he might also just be really, really new. But if he is new, arguing about stuff that people actually know about is silly. But again, I like it. I have fun with it. It's all good. He might be trolling. If he is, it's hilarious. Printing doesn't cause inflation. Water doesn't make you wet. John's not the top 3 greatest of all time in the world right now. SPY back over the 200 EMA. Look at it bounce back here, chat. But I thought we were downtrending. Hey, thanks, Will. Appreciate it, man. Thanks. I said yesterday that today would be a dump day. CPI data pumped yesterday. PPI and bank earnings now make the market correct. I don't know. Again, it's all good. John's all right. Yeah, definitely top 3 greatest of all time ever in the world at being all right ever. Chewy is still at 2670s. Again, market's very sideways. How do we know it's sideways? Because we can zoom out and look at it and kind of just see it. Like, look, up, down, up, down, up, down, up, down, up, down. This is the market's price action. I actually like it when it trends like this. One-hour chart for SPY. DC head and shoulders. Where? This? I'm assuming you mean this right here, where we have the head, the shoulders. I mean, kind of. Yeah, I mean, I can kind of see it but I think a lot of this is based off of data, and so technical patterns like this might be less useful. But again, I do kind of see what you mean. Johnny keeping the chat entertained. Listen, that's what we do here, you know. Yeah, I think it's okay if we pull back 5% right now. Yeah, right. If money printing reduces inflation, you know, just start that train a going, man. Let's see it. Print that money, you know. Bring interest rates down. Print that money, you know. Lower that inflation, right? Again, I almost feel bad saying this out loud because some people are not going to understand the sarcasm and they're going to think I'm saying the truth. The reason we're making fun of John, because yesterday John said that money printing did not cause inflation, and he was like, ugh, this guy's an idiot. He thinks money printing doesn't cause, he thinks printing money causes inflation, you know. The reason we made fun of him is because one of the most obvious economics 101 correlations is money printing causes inflation. Low interest rates and quantitative easing and money printing obviously causes inflation in economics. This is very clear. More money that's printed, more money that's spent. The more money that's spent, businesses raise prices because they can. If I sell bubble gum at 25 cents a piece and it sells out by noon from all the spending that happens, I as a business owner, I'll probably raise prices to 30 cents or 35 cents. Why? Because I can. Because buying has occurred. An abundance of buying has occurred. And thus, printing money causes inflation, right? It's one of the most obvious correlations in economics. With that said, I'm one of those people that do not think we should raise interest rates. Or I'm one of those people that do not think we should cut interest rates anytime soon, because I think that we should continue to discourage spending by keeping interest rates high. What happens? It discourages spending. It causes people to spend less. Why? Because if people are paying more money in mortgages and auto loans, they have less money to spend on other things, right? And when they have less money to spend, they stop spending as much, prices go down eventually. Or not, in theory, prices slow down. They're not going to go down usually unless we hit like a depression or something like that. But again, until we see until we see some really bad signs, which I don't think we see yet. None of the signs economics wise seem bad enough to justify cutting rates. But the other part of that is that it's an election year. And so the Federal Reserve is, I'm sure, getting pressure to make the economy the best it could ever be right now, and that means cutting rates. Even though the people are going to pay on the back end of that if we do cut rates early to try to, you know, help the election or whatever. People are going to end up paying for it in prices. Like when prices are cut, or when interest rates are cut, the consequence of that is prices are going to go up. Inflation's going to spike because people are going to start spending much more with lower interest, and prices are going to spike, right? So that's kind of the nuance of all of it. We'll see what the Fed does. Right now, the Fed's been pausing rates for the last 8, 9 months, 10 months. I don't know how long it's been. I'll have to go back and check. But they've been pausing rates for a long time. Prior to that, they raised rates pretty aggressively, and they're doing this to try to push the economy down some. So we'll see what happens. Yeah, I'm catching back up on chat after my long-winded rant about money printing and inflation. Still catching up. A lot of comments here, which is good. Yeah. It's the main and only reason for inflation. It's not the only reason. Spending can be influenced outside of just printing money, you know. So I wouldn't say it's the only reason, but it's certainly the main one. Money printing reduces inflation. Let's just keep on printing then. Puts it back or what? I don't know. How will SPY react? Bank strength or weakness is going to depend on what happens with rates. Banks are stronger with low rates, but the problem is that the consequence of that is inflation. So it depends on what happens. I don't know yet. Depends on when they cut rates. If they cut rates earlier, banks will probably go up. SPY moving up too. Look at the SPY test the highs up here. So SPY just broke highs. Same lag from QT to disinflation, sure, right? But we've been doing QT for years now, so and again, we are seeing prices go down. That's why CPI data came in low yesterday. PPI is a little bit more yeah. Yeah, it's Friday. After someone has lost a lot of money in the market without having proper education, do you suggest calling quits or putting an effort to learn, even with market RNG? It depends on what, like, in the market is a very broad term, Phil, right? So by saying in the market, do you mean day trading? Do you mean investing? Do you mean all of market activity? One of the things that you see people, like, one of the biggest marketing nonsense, like, one of the biggest BS parts of the market is that you need some type of expensive education to trade stocks, right? So you see a lot of these day trading gurus talk about, what the number one thing you should do is education. Now, buy my day trading course. It's $3,000 a month, and with it, you'll learn the master secrets of the market. Total nonsense. You can find almost all content publicly available for free without needing to pay a penny for any of it, right? The only people that are really pushing for you to pay for education are the people selling it, so just ignore all of that altogether. You can find most content available for free on the internet right now, right? You don't need to pay for some super expensive mentorship program. And even these quote unquote mentors usually have thousands of other students. Like, they're not actually your mentor. They're just some guy on the internet charging you for publicly available stuff. But again, a lot of people get wrapped up in that, and so they get stuck with that, and they start, like, if you do spend the money on it, and I say this every day, but I'll say it again, if you do spend the money on it, you got some people that it's too hard to look at objectively, and so they're just going to act like it's the greatest course they've ever taken because they want to justify that expense, right? And that's a really hard thing for people to accept as well. But anyways, back to the point. It depends. If you are, like, day trading's difficult, and the biggest problem most traders face day trading is too large of size. Trade small. Trade with a demo account. Trade with a funded account program. Learn how to trade that way. Don't risk thousands of dollars of your own money in the beginning learning to day trade almost ever. It's silly. It's ridiculous. You shouldn't do it. You're probably going to lose. And, the only people that really think that they're going to start day trading and all of a sudden make all this crazy amounts of money are people that get sold on day trading courses and day trading get-rich-quick schemes. Outside of that, though, you should always be investing, right? And if you're having trouble investing in the market, if you're having trouble profiting from investments, it might just be you're zoomed in too much. Investing takes time and energy, and it takes years to really let certain things play out. And so if you're not making money right now and investing, I would just wait. I would dollar cost average, and I would only invest what you're okay with losing. But if you wait long enough, as long as you're not investing into terrible penny stocks or mid-cap stocks, and you're specifically choosing blue chip healthy companies or index funds, if you wait long enough, you're going to make money. But you shouldn't trade so large at a point in which you're trading so large that you can't let that long-term edge play out. So if the losses you're experiencing now are too much, you're probably trading too large, or investing too large, I should say. So again, it's a very loaded question. There's a lot of answers to that. Would you ever consider creating a watch list of stocks for the week? I mean, again, what kind of watch list? Like day trading watch list, swing trading watch list, stock watch lists. Like, it depends. There's a lot of stuff. Yeah, when you save the economy by quantitative easing and printing money, well, QE is a form of printing money, but sure, the artificial strength has to be paid for in the future. 100% the consequence of QE, and if you don't know what QE is creating bank reserves, printing money through creating online bank reserves that the Federal Reserve then uses to go buy financial assets like bonds mostly. And this injects liquidity into those markets and allows the banks to lower interest rates to consumers. It's kind of a more desperate way to lower interest rates that they did in like 2008. They did it in 2020 to try to save the economy from the economic weakness that we were facing. But again, the consequence of that is inflation, right? And so after 2020 and like 21 and 2022, we saw inflation spike up to like 10%. And now they're doing QT, which is the opposite of QE, which is just letting their balance sheet shrink. And again, that's keeping interest rates high as well to try to discourage that inflation. And that's kind of what we're seeing as inflation get better. But it takes time. It takes time. For swing trading, I don't know. Swing trading would mostly just for me be looking at like earnings. Earnings coming out. Like a lot of the news happens in pre-market. Sorry, my dog's over here yelling. Am I able to connect to Quant Tower and Apex? You have to upgrade. I upgraded Quant Tower, so you have to update it. The new one's a little bit better, I would argue. So the new Quant Tower is a little bit better. Hopefully, it should have less problems. So Quant Tower did have an update for everybody at home on Rhythmic. All right. If the put and call ratio is higher, yeah. I mean, people like to look at that as well. That's kind of where you get like the unusual whale. Like there's a lot of online software tools that let you look at the put and call ratio. It's not a perfect science though, even though it's marketed as one. Again, there's a lot of nuance behind it that, it's not perfect, I guess is the point. It's useful, but not perfect. I don't know. I updated this morning, Chuck. I don't know when the actual update was. Again, do me a favor, hit that subscribe button if you haven't already. Hit the notification bell. I appreciate the love. Thanks so much. Let's keep the growth up. We got 30 minutes until the market opens, chat. 30 minutes. Is having 17% of your portfolio in NVIDIA too much? For me, yes. But everybody's different. It depends on how, I would argue yes. It depends on what the rest of your portfolio looks like, Phil. But it depends on your plan, your time frame. Like if you're planning on holding that for 5, 10, 15 years, it's not terrible, but it's also really, really risky. So it depends on your risk tolerance. I don't know, David. Options prop firm. I'm not sure. Yeah, I don't know. Thoughts on lithium futures? What's the symbol for lithium futures? I think lithium will continue to be a large part of EVs. What's the symbol for it, though? I'm curious. Citi already selling off. Yeah, Citi had earnings this morning. They came in pretty decent. But they're still up a lot. Most of the time, they're not going to hold all of their gains, but we'll see what Citi does here. How big a percentage is your equity holdings? I mean, now I got about $64,000 maybe. I thought I had more than that in T-bill, TBIL, but so if you look at my T-bill position, I've got 1,400 positions here. Yeah, I don't know why it says my positions. It says right now, Toss says I got about $64,000 in holdings. But T-bill is a little bit different. So again, I talked about this yesterday. So T-bill here is a treasury bond ETF that pays me monthly dividend payments based off of the percentage. And so T-bill here will give me about 5% annually. And so if I invest 70K into T-bill here, which is basically what I did, and it pays me 5% every year, it's going to pay me about $3,500 annually. When you divide that by monthly, which is how much it's going to pay me in monthly dividends, it's going to pay me about $300 a month in monthly dividend payments for parking my money in TBIL here, right? So it's a treasury bond. It's a treasury bond ETF that pays out dividends, is what it is. And so if I'm not using a ton of my money, I might as well let it sit here. No, let me see. So it says I actually only have about $49,000 in T-bill. I'm not sure why. Let me see. Maybe it has to do with P&L, like profit. I got it at 49.96. Yeah, weird. It says buying power effect, so maybe like how much I'm using varies, but I don't know. Is there a lithium futures contract? Like, is there a few slash lithium or slash lithium or some sort? I'm curious. Let me look this up. It's LTHU. Is it LC? No, it's live cattle. What are the dividends on T-bill? Well, they're 5% annually, depending on how many contracts you own. So it's really technically it's 4.99%. So it depends on how many contracts you own. SPY kind of pulling back a little bit. Look at Nvidia fall. So Nvidia falling down to 127s. Why not put your money in ETFs, high growth stocks? Because I mean, I am, right? But right now I've taken a lot of profit in those currently. No, it says lithium is typically traded through spot prices. They're related ETFs for lithium. But yeah, so again, people are asking me why I don't like, because I've already taken a lot of profit off. I'm mostly a swing trader, but I am holding like long-term positions in a lot of stuff. Like my portfolio currently includes Apple, Airbnb, AMC, Alibaba, Chewy, Salesforce, CVS, Delta, Disney, Etsy, Ford, Gold, GameStop, Google, Home Depot, Honeywell, Intel, Coca-Cola, MGM, MU, Netflix, Nike, Nvidia, Pfizer, Palantir, PayPal, Shopify, Snapchat, Snowflake, SoFi, SoundHound, Target, Tesla, Tyson Foods, Uber, and Walmart. But I'm also holding some like SPY and Q stuff too. So LTH1. Yeah, I mean, I don't see it on TOS where I can usually look up future symbols. Yeah, no, lithium doesn't really have any symbols. There's an ETF for lithium. Nothing. What's the best lithium ETF, guys? Do y'all have anything? I mean, I have some AI. So, again, AD, you got to understand, like, a lot of these are AI plays, you know. MU's an AI play, Intel's an AI play, Google's an AI play, right? So I think you got to look at it in that regard. Tesla's an AI play. SoundHound is an AI play. SoFi, maybe not SoFi, Snowflake, and Apple is an AI play. Salesforce is an AI play, right? So a lot of these are taking advantage of AI as well. But again, like, we add and sell depending on what happens. All right, guys, we got 5 minutes. We got 25 minutes. All right, so let's end this poll. So we just ended it. Oh man. With earnings season coming up next week, does the market react? Are you bullish or bearish over the next 2 months? All right, with earnings season coming up next week, are you bullish or bearish over the next 2 months? That's a good question. What's people's sentiment over the next few months with earnings season on the horizon? Yeah, I rotate in and out pretty regularly to avoid risk, right? Like, a lot of the time I am swing trading. I have this weird mixture system of swing trading and investing, right? So what I mean by that is, if we have a strong company that's been uptrending for years that has a big pullback, I buy into that strong company and ride it back to the top, right? Once we get to the top, I'm usually okay with selling a little bit at the top here and then waiting for another pullback. And this is only in blue chip stocks, as opposed to somebody who, like, instead buys the highs and then a lot of the time they pull back and then, you know, they can maybe add more. So right now the problem is, like, I've been taking profit a lot lately. So my portfolio is a little bit lighter than it usually is, just because we've been testing highs so much. You know, we're just going up too much. At a certain point, I'm, you know, getting ready for a correction where I'll add right back to it. So that way I have limited risk, but I also still capitalize. And there's some stuff that I hold through all of it anyway, like Apple, you know, like, there's a lot of stocks that I hold regardless of anything. Like, I really like Home Depot stock, and so usually I'm adding back to that one pretty quick and stuff like that, because I think Home Depot is going to be fine long term, but it's not every stock for sure. Tesla, will it go up or down? Why is the sky blue? I don't know. I don't short anything long term at all. I short day trading, index funds mostly, but I don't hold anything short over a couple hours usually. because again, like most of the time I'm betting on the strongest companies in the world, right? And I think one of the biggest sucker bets in the market is trying to pick the top of the strongest companies in the world. Like the problem is that people see the stocks go like this, right? And so they start shorting the top long term. But the problem with blue chips is that they'll keep going like this, right? And the longer you hold them, the less likely you are to make money on the short side. And so for whatever reason, you got a lot of people that are just obsessively trying to short the strongest companies in the world. And I think it's silly. I think if you're going to short, you need to find companies like I've thought about setting up short funds, right? Like Hindenburg and stuff like that. I really genuinely have thought about this. It's a time, an issue with time for me. But an example of this is like my favorite stocks to shorts are stocks that are wildly overpriced. They're almost never blue chips. They're almost always mid caps and recently hyped up stocks. They're not legacy companies. What do I mean by that? I mean like Peloton. Peloton up a huge amount after the pandemic, obviously extended. It's virtual reality bicycles where real bicycles are actually less than the virtual reality bicycles. And so Peloton went up to freaking $170 a share in the middle of the pandemic. It was never going to hold that, right? And I told people this at the time when it was over $100. I told people Peloton was terrible. It wasn't going to work. And of course, Peloton is now at $3 a share, $3.50 a share. Same thing with like Beyond Meat, BYND, right? Lab grown meat company. Vegans are incredibly health conscious people. They're not going to really experiment with lab grown meat just because it tastes a little bit better than what they're eating. They try to sell stuff like this at Impossible Meat at Burger King, where vegans don't eat at Burger King. Like, it's just a terrible business idea. It's incredibly expensive and nobody basically buys it, right? And so Beyond Meat went from $240 a share down to $6 a share where it's sitting now. So there's companies like this that are relatively new companies. They're not really penny stocks, but they're not really blue chips either. They're kind of somewhere in the middle in like mid-cap territory where their weakness is very obvious, right? Where they're obviously not going to be successful. And so if you could profit from those companies, those are the ones to target with shorts, right? It's not Apple, trying to pick the top of Apple. Again, that's the biggest sucker bet you can get in. It's not trying to pick the top of Microsoft or Nvidia. Again, the risk of doing that is crazy high. Instead, like if you watch Vlad speak on or if you watch Martin Shkreli, who's Pharma Bro, he's the guy that raised the prices of insulin. He's actually got a really interesting story. He made hundreds of millions of dollars shorting stocks, right? But the way he did it is not like most. It's not like he was shorting Apple or Amazon or Google or Walmart. That's dumb. Like, that's stupid. Those are the strongest companies in the world. It's dumb. They're gonna go up over time inevitably. It's dumb to do. What he made hundreds of millions of dollars shorting was pharmacy, was biotech stocks, was he understood medical, he understood pharmacy stuff, medical stuff, drug approval, trial systems very, very, very well. He said he read the medical journals obsessively since he was like 16. And so he read every single one. He understood pharmacy, tech, biotech, drugs, trials very, very, very well. And so he said, basically, if you can understand that, you know what companies are going to fail. Like, you know what drug companies have no shot at succeeding. And so he identified those companies that he recognized to have absolutely no shot at succeeding and made hundreds of millions of dollars doing it, right? But again, he's not shorting Apple or Amazon. That's dumb. It's stupid. Trying to pick the top of those companies is a rookie thing. It's a rookie bet. Instead, find big edge positions. Like I said, Peloton is my favorite example. Beyond Meat is my favorite example. I think that's what smart people do. John, thoughts on day trading blue chip stocks? I think day trading blue chips is fine if you can do it right. But again, most people can't do it right. Yeah, I'm not saying I'm not doing it. I don't understand pharma stocks. I avoid biotech stocks like the plague. They're super volatile. Again, if I was going to short companies, it would be companies like Peloton, Beyond Meat, companies that are obviously overhyped, overpriced, and are going to come back down. What's considered blue chip stocks? I would say a blue chip stock is a stock that everybody's heard of. Coca-Cola, Apple, Amazon, Walmart, Target, Disney. These are blue chip stocks. How do you split between swing trading long term? The way I do it is I buy really extended on the downside blue chip healthy companies that are dropping big over a couple months or longer. I buy them. Most of the time, if I pick my entry correctly, I'm going to make money within a couple weeks. I'm going to be up, right? And I'm going to usually take 60% of the position off and then let the last 30% ride long term. If I'm wrong, then I have to make a decision. If I'm wrong, I'll either sell or I will dollar cost average and just turn into an investor of the company. And usually I almost always make money here. My average is my accuracy rate's pretty high. I'm up thousands of dollars a year doing this. And I'm up a pretty big percentage on the year as well, versus the amount of my portfolio I'm using to do this. What do you think of the number one reason aspiring traders can't do it right? As you said, easiest way to put it is just unrealistic expectations. Like most traders, like again, the problem is that like you got a bunch of young people mostly. Like this is mostly young people who recognize the marketing potential of the investing and day trading sector, right? So they recognize the marketing potential of it, and so they just start feeding everybody complete and utter nonsense. Like you can get rich quick. Like you can make 50K a month, guys. You can make 5% a day, day trading, like, which is just never going to happen. Like, again, I've said this 1,000 times, but if you made 5% a day, Goldman Sachs will buy that system from you for $1 billion. You'd be a billionaire. You know why you don't see a lot of billionaire YouTubers is because they're full of crap, right? They're just selling you stuff. But because they are so persuasive with their marketing, they talk a bunch of other people who don't really know any better, who are just now entering this kind of space. They talk a bunch of other people into wasting their life savings trying to get rich quick, chasing a nonsense dream. Most day traders lose. The only ones that end up being successful are ones that take years to learn, and they'll probably lose money for years. And if they're smart, they'll trade small while they're learning. And if you trade small, you're fine, but a lot of new people get into this market. They risk 10, 20, 30K. They end up losing most of it, get frustrated, quit, and leave, and then you never see them again. And it's mostly from unrealistic expectations due to marketing. That's the reason most people lose in this space. And it hurts a lot of the time. Like, it hurts for them to look at it objectively and admit they got sold on a nonsense dream. I would say bank results were neutral this morning. JP Morgan had decent results. They're actually flat, basically. They're slightly down. Citigroup is slightly green. Wells Fargo's down. So some of them are green, some of them are red, some of them are flat. And overall, I would just say they were neutral. No crazy volatility, at least from it. Wells Fargo's down a bunch, though. And something I always try to tell people is that, like, I could make so much more money if I just pretended day trading was easy, sold you guys a course, used my house as some type of credibility boosting thing. I can make so much more money. I can make millions and millions more doing what I'm doing, doing what I just said, if I wanted to be sleazy, And that's why a lot of people in the space don't like me either, is because I point out the sleaziness. But I try to be honest with people. Like, yes, I have affiliates. Like, yeah, I promote, a couple affiliates and sponsors and stuff like that. But I'm always transparent about it, and I try to be as honest as I can. I'd like to sleep good at night doing what I'm doing. And if I'm lying to people about how easy it is just so I can sell more, I'm not going to really sleep good, am I? Sleaze me up. Yeah, Tesla's down a lot. Again, Tesla's probably down because of them delaying their robotaxi event. They were supposed to do their robotaxi event in August next month. Now it's pushed back to October. So they had this big bull run. I think they was due for a pullback anyway, short term. PPI is already out. So right now, Nvidia's slightly red on the day. You can see the previous closing price right here above me, like right there. The light blue line is the previous closing price. You can see Nvidia slightly underneath that, like slightly down. Does it matter that companies like Tesla and Nvidia trade at a 70 PE ratio? I mean, yeah, it matters. I think a lot of stuff's extended on the upside, and it's time to pull back some. I don't think we're going to have some crazy parabolic crash, though. I think we're just going to have a normal, like 5 to 7% correction, and then we're going to go back to business as usual. At least that's what I hope happens. And if we do pull back like that, I'll probably buy some stuff up, but... yeah, we're going to get ready to day trade as well. We're up slightly on the day. Like you can see, we're up about 120 bucks or so. We'll see if we can keep that up. We're going to get ready to day trade. Market has been incredibly flat after PPI inflation data came in. Higher than expected, worse than expected. Now it's kind of coming down a little bit. Yeah. Expected moves. I mean, I don't know if anything's an expected move. I mean, we can speculate on what happens. Nobody really knows, though. No, there's no such thing as stock futures. Stock futures don't exist anymore. You know, the quad witching day used to be all 4 major contract types, which was index options, stock options, index futures, and stock futures, right? The problem is that stock futures no longer exist, and so really it's only technically triple witching day, which is index options, stock options, and index futures, right? Like the S&P, the NASDAQ futures. That's what you trade in futures now. Every time I ask in the chat, I don't get a response. I just responded to you, Michael. You said, do you use expected moves or know how to use them? And my response was, it depends on what you mean by expected moves. I mean, we can speculate about what happens, but nobody knows. So I think even the term expected moves is, nobody really knows. Like, we can expect potential volatility or whatever, but I don't know what anything's going to do. Nobody does. We can only guess. Yeah, who's expected moves? Chipotle shares? Yeah, Chipotle necessarily. They're needed to do a split, and it did. It's not pulling back some. I don't really like Chipotle as a food place very much, though. Do you think a 24-hour market would change anything? It would change everything. It's stupid. I don't think we should do a 24-hour market. It would make, like, the exciting part of the day is the opening bell. If we did a 24-hour market, number one, it would be chaotic because there's a reason we have pre-market, main market hours, and after hours. Is so we can report news in pre-market and after hours, and we can get consolidated volatility and volume during market hours, right? Like, that's what we want. To make everything 24 hours, it would just be much less volatile, much less exciting. It would take away a lot of traders' careers and jobs. I just think it's stupid. We should never do that. We should just keep it like it is. Hey, I got a question. I saw on Twitter. Can you explain what washed means? Do you mean the wash sale rule? The wash sale rule basically means that if I lose $1,000, if I make $1,000 in Apple, and then I lose $1,000 in Apple, and so really when you compare everything and zoom out, I'm flat on Apple. I made $1,000, I lost $1,000, I'm flat, right? The wash sale rule basically says I can't write off the $1,000 loss because technically I'm flat. So basically the wash sale rule basically means you can't write off losses that you were technically flat on to begin with, if that makes sense, right? So I can't make $2,000 and then lose $1,000 and then write off the $1,000 loss and not do anything with the $2,000 profit and act like I'm genuinely down and write that off, right? That's what the wash sale rule is for, is to basically make it so that you can't write off false losses on paper. The shorts are playing both sides of shorting and actually buying the sale. Oh, no, I don't mess with that. I don't know about any of that. What are the stocks? What are these stocks are good for long-term investments? Once you share the stocks you own, can you share me one more time? You shared some 20+ stock names. Again, I'm not telling anybody to buy anything. I have no idea what stocks are good to own. This is just my own investment my own investment portfolio. Not an investment professional. I'm terrible and might have no idea what I'm talking about. Might be wildly wrong about anything I say. It's entertainment only, and my experiences, wins or losses, may be conducted in real time or on stream. Do not copy me. I have no idea what I'm talking about. Yeah. Not an investment professional. NVIDIA all the way back up here. All right, we got 4 minutes, chat. 4 minutes. All right. I'll put that up at the bottom of the screen. I'll leave this up too. All right, guys, here we go. Let me put the music back up. Where'd it go? Where's the music? We got 2.5 minutes, chat. 2.5 minutes. Yeah, definitely top 3 disclaimers in the world. You're a semi-pro investor. Definitely top 3 semi-ist pro investor in the world right now. All right, guys, we got 2 minutes. NVIDIA's spiking up a little bit. Tesla falling down. Citigroup trying. NVIDIA's bouncing up some, though. We'll see if NVIDIA continues to run us at 128. We got Tesla sitting at 235s or so. Citigroup pulling back some. Again, remember, we're trading on Apex, which is a funded account program in futures. Apex gives you a demo, and they test your skill with the demo account. If you pass the test with the demo, they fund you with a regular account. This is if you want to learn to day trade with limited risk. Again, most day traders lose, right? So most day traders will probably lose here as well. That's just the truth. But it's a lot cheaper to lose here than it is to put up the money yourself. And if you pass these tests, they fund you between 25 to 300K with a 90% split. The base one's 25K. They give you a 25K demo account. If you can make 1,500 without losing 1,500 and following their rules, they fund you 25K with a 90% split. It also comes with real-time data, which if you're going to pay for real-time data yourself in a demo, it's going to cost about the same, which is $35 roughly. And for the time being, for $35, you can also get the 150, 250, and 300K challenges for around $35 if you use my coupon code and link. And again, if this one you get 150K in funding, 250K in funding, 300K in funding with a 90% split, And so once you're funded, you're getting 90% of your profit anyway once you're funded. So it's similar to putting the money up yourself. But if you lose, you're only out 35, 40 bucks. It's not the end of the world. They pay out hundreds of millions of dollars. They paid out over $230 million since 2022. Great way to learn how to day trade with limited risk and kind of get your feet wet without risking thousands of dollars like most people do. But again, remember, they're a sponsor of mine. They pay me money. I'm biased, of course, because they pay me money. And most day traders lose. I think it's probably the same here as well. You can check them out there. That's what I'm going to be day trading on today. Anyways, there's the opening bell, chat. I'm going to put up just Nvidia, Tesla, maybe gold. Watching the NASDAQ on the left side here. I like the 50K account, David, but that's just me. Tesla up to 236. All right, look at Nvidia fall down, so we got to watch the video pretty closely. Tesla's bouncing, though. I'm going to buy this dip. Terrible fail, but that's all right. All right, we just made about 100 bucks. I'll take it. We're up about 200 and something now. Look at that spike here. Again, I saw Tesla and Nvidia start to ride. Look at the market churn up here, running. Yeah, everything's starting to bounce. Interesting. Where's Disney at now? Disney at 97s. Chewy bouncing up a little bit too. Look at Tesla start to reverse here. Look at Tesla come all the way back down to 234s. Weakness showing up. Man, this choppy range is played out really, really obviously. I was gonna buy this, but I'm gonna. There's Tesla fall. All right, we just made another 100 bucks or so, a little $70, $80 gain. We are now up about 250 actually. This is what we think Tesla's gonna do here. I don't know. We're gonna trade the profit that we have here. See if we can make some money on a retracement back up, but oof. Well, yeah, I gotta cut it. So we gave back most of our gains. Now we're down on the day, but it's all right. We'll switch accounts and see what else we can trade here. Yeah, well, we'll keep trying to trade this one, I guess, but ended up giving it back, unfortunately. We'll see if the market bounces right back up too. Look at that big retracement all the way back up. We'll see what Tesla does. A lot of it's going to depend on what Nvidia does here too. Look at the market surge. My portfolio is still doing pretty good. Here's Nvidia start to turn. Here's the market start to turn down. Look at Nvidia start to fall. Market's trying to bounce at the bottom here. We'll see if it holds. Very choppy market though. Y'all just be careful. Who knows what the market's going to give us. Look at Tesla start to rip back up. Start to come back. It wants to come back here too. Let me know if the music's out. Look at Tesla start to bounce all the way back up. Nvidia's starting to fall. We're actually very green on our equities portfolio. What is this? Disney is up a lot today. Hush, Bruce. Be quiet, buddy. All right, so market started to bounce. Ugh. Sorry, my dog's barking at everybody. My bad, guys. Bear with me. Bruce looks like a bear, too. Alright, so again, equities push it up. Tesla's still ripping here. Market's flying up. There's Nvidia start to bounce. See, I'm kind of skeptical of it though. Wow. There's everything start to rip. There's a push up more. There's Tesla breaking highs. Nvidia start to run. Still pushing. See if we break highs up here or what. Look at Tesla, guys. Wow. Tesla just ripped over highs. Hey, what's up, Shepard? Tesla's still churning here, team. Yeah, so Nvidia's kind of indecisive. The whole market's kind of indecisive in this front here, I would say. We'll see. Depends on if we get a double top or not, but my equities portfolio is pretty good. Let me see if we can start taking some profit here. Explain margin. All right, so there's an Nvidia starting to churn up. Where's Bitcoin at? Bitcoin's still at 58K. It's not doing that bad. Here's the market start to come back down some here. Bitcoin's not really that bad. Yeah, Bitcoin is just normal flows. I mean, Bitcoin pushes up to lifetime highs at 75K and then pulls back to 60K. This is very standard in what Bitcoin does. Really, Bitcoin's been mostly sideways all year. It's down a little bit, but Bitcoin went up to lifetime highs at 75K. We can't expect it to just go straight up. That's not a reasonable expectation, I think, you know. So I think we got to just be patient with it and see what it does there. We're gonna see if Nvidia starts to finally dip. Yeah, I think robotaxis are gonna be the future for sure. I think anybody that looks at markets objectively recognizes that. Bitcoin is a short freeze where you could profit, then it just tanks. Yeah, I mean, again, look at Tesla go green on the day after CPI data. I'm gonna switch this account. I think we're down enough on it. Let me see what else we got. So we got funded on another one yesterday. We got a bunch of these accounts that we're not using. Let me see. Oh, we got a couple different ones that we're using. I'll show you guys this one. Kind of buy this dip, see if Tesla and Nvidia can fly back here. I think if I would have, I still haven't been able to get funded in one of the 250K challenges. See, this one, this is a 250K one where we're up about 5K. The question is whether we're going to get choppiness on a Friday with bank earnings. There's Nvidia falling down. The problem is Nvidia's falling down and Tesla's falling down too, right? So, you know, the 250K one is probably my least favorite one because it's so freaking, like, the trailing drawdown hurts you so much on the 250K one in my opinion, right? Like the 50K one is much more reasonable. But again, we got a bunch of these that we're not even playing. I want to see if we start to bounce back. The problem is Nvidia's falling and Tesla's going up. So we do have sideways chop. What it depends on is if Nvidia gets some legs or not. If Nvidia gets some legs, we'll be fine. As long as Tesla continues to rip. But look, yeah, there we go. We're going to get busted out of it, unfortunately. Yeah, there we go. So again, we got busted out of it. The problem is it's just so choppy today, guys. Again, we lost. This was a challenge account, so we didn't actually lose anywhere near that much. It was about 40 bucks. But again, I've just had bad results with the 250K challenges. They're hard. We got funded on a couple different ones yesterday. We've got a couple that we're actually just letting kind of sit here that we're not even using. So those are the ones I'm playing with now. Let me see. What else? What other ones we got? Okay, so here's another. All right, so here's another one. And again, these are just challenge accounts that we're not using, that we're just kind of playing with. We'll see if we get the... Yeah, I mean, Michael, listen. Okay, I'm trying to think of the easiest way to put this. So, like, everybody always thinks that their indicator is the best, right? So I think the VWAP is the best indicator, the 200 EMA, the volume weighted average price 200 EMA combo. I think that's the best indicator, hands down, right? Some people think pivot points is hands down the best indicator. Some people think, of course, you think expected moves is the best indicator, hands down. So I guess my point is, recognize the subjective nature of it. Like, a lot of traders think that their way is the only way, but experienced traders tend to zoom out and understand there's a lot of different ways to skin a cat. Like, there's a lot of different ways to to do it, if that makes sense, right? All right, well, we are 2/3 of the way there on this one. If we get a pullback, we'll add some size to this. Wow, what a crazy move here, all of a sudden. Wow, look at this move. Crazy. Yeah, I guess it's my fault for trying to play this extension. I was hoping we get a rejection here, but it doesn't look like we're going to. We're at the top of the range. If we get a rejection here, we'll basically be funded, but it's going to be difficult to catch, I think. A lot of momentum on the upside here. Like, in theory, I wouldn't mind getting funded on a 250K challenge. 100% agree, John, although Delta is the best. Yeah, I feel you. I was hoping we would reject here at the top of the range, but something just powered through the market. I'm trying to see if there's a catalyst. Yeah, well, we got Michigan Consumer. Yeah, so there we go. So it's frustrating because it's like I could never get funded the 250K challenge. Like, I don't really try that much. Like, we got a bunch sitting, but I think the smart move. I don't even think the ratio is very good on the 250K challenge, though. Like, if we're being honest here, the ratio is kind of crappy on the 250K challenge. Like, it's really hard to get funded, and if you do, Yeah, it's just really difficult to get funded on the 250K one. I just don't like the ratio as much. So the price, how expensive it is versus, it's just not worth it. Wait, what? Did not let me. Hold on. I got a bunch of 50K ones. Let me see, 250. I don't know. I still have these 250K ones at 35 bucks a month though. So like, I think that's a bad deal to cancel. 36 a month, 36 a month, 36 a month. PA monthly. Yeah, we can cancel this one. Are we having problems canceling the 50K one? 36, 36, 36, 36. I'm trying to cancel some of these, but look at it. Look at Tesla fly up. So my actual equities portfolio is doing pretty good. The MU is going really well today. All right. Look at Nvidia shoot up too. Nvidia at 170s. Mic cut. Is my mic cut? Okay, it's back. All right, good. Yeah. Is anybody else running into glitches if they try to cancel? Like, I'm trying to cancel. It says an internal error happened in the script. Please contact the webmasters for details. Maybe I should log in and log back out again. Let me see. Log out. Now let's log back in and see if that works. Let's cancel this one. Did it cancel it? I can't figure out if it... Okay, yeah, so it... Okay, cool. So yeah, so it never mind. I just had to log back in. That's all it was. Yeah, so it's fine. All right. Anyways, guys, Monday morning, we got Jerome Powell coming out strong. With Jerome Powell Monday morning, we'll see how that looks, guys. Monday morning, we got Jerome Powell. Next week, we got retail sales. If you haven't already, check out Apex's funded account program. Apex, they give you a demo, and they test your skill with the demo account. We have multiple funded accounts on Apex where we're up thousands on. And again, if you haven't tried them, it's a great way to learn day trading. Everybody always asks, like, how do you learn day trading? The way you learn is funded account programs and futures. They get some haters. Some people hate on them, and I get it. I really do, because most day traders lose, right? But it's a lot cheaper to try a funded account program and fail than put up 5K yourself and fail. If you put up 5K yourself, you're probably losing $5,000. It makes no sense for a new day trader that wants to learn how to day trade to risk thousands of dollars. Instead, try a funded account program. The base one on Apex is only $35. You can get 150K, 250, 300K, or 25K for roughly $35 a month if you use my coupon and code and link. If you pass those, you get tons of funding. If you fail, you're out $35. It's a great way to learn day trading. Most day traders will lose here as well, but it's just a great way to learn. If you want to check them out, here's the link. Check it out. I'm going to get out of here, guys. It's been a busy and long, busy week. So I'm going to go ahead and get out of here, guys. I love you all. You'll have a great day. Well, we will be back next week here, chat. So we will be back next week. Y'all be good. It's been a crazy busy week. We got Jerome Powell on Monday, retail sales on Tuesday, earnings for banks Monday and Tuesday. Week after that, we got Tesla earnings. Next week, we got Netflix earnings. A lot of crazy stuff's going on. Be ready. I'll see you guys later. Y'all be good. Have a great, safe weekend. I'll see you guys later.